Good morning, everyone. We're going to give it one more minute and then we're going to get started. Good morning, everyone, and welcome to What's Happening in Wheat and Barley Markets, a webinar brought to you by the Alberta Wheat and Barley Commissions. My name is Geoff Backman, and I'm the Business Development and Markets Manager with the Commissions, and I will be facilitating today's webinar. We have a fantastic lineup of guest speakers today. Chuck Penner of Leftfield Commodity Research will provide an update on feed grain markets. Lisa Nemeth, Director of Market Support and Training with Cereals Canada, and Peter Watts, Managing Director of the Canadian Malting Barley Technical Centre, will speak to how their organizations promote Canadian grains. David Derwin of PI Financial will present some trading insights. And to wrap things up, Brennan Turner of Combyne Ag will provide an update on the markets for milling wheats. Now, before we begin, I'd like to go over some housekeeping items and other resources the Alberta Wheat and Barley Commissions have available for you to access for free. Each speaker will present for their allotted time, after which we will have a short session for questions. The Q&A button at the bottom of your screen will allow you to type a question. Please enter your question at any time during the presentation. Once the question period begins, I will read the presenter the questions that have been submitted. Again, the Q&A button can be found at the bottom of your screen. Should you need to leave this webinar early, you can watch this again later as we will be posting a recording of this webinar to our YouTube account. Lastly, please join us on social media. We love to see your tweets and engagement with the commissions, and tag us at Alberta Wheat and at Alberta Barley. Before we begin, I'd like to quickly highlight a couple of resources the Alberta Wheat and Barley Commissions have available for Alberta farmers. If you are looking for timely, accurate, and transparent grain pricing, I encourage you to check out pdqinfo.ca. The Alberta Wheat Commission developed PDQ to provide farmers with timely regional averages of grain market pricing. Megan will drop the website address in the chat for you to check it out. Finally, the Alberta Wheat Commission has a weekly market outlook article called The Market Insider, which is written by Brennan Turner of Combyne Ag. If you are interested in getting this weekly update sent directly to your email, please subscribe on our website at albertawheatbarley.com. Megan, if you could drop a link to subscribe in the chat box for our attendees, that would be great. All right, that should be everything. I will now pass it over to Chuck Penner from Leftfield Commodity Research to provide some insight and clarity around wheat and barley feed prices. Take it away, Chuck.
Well, thank you, Geoff. It's good to be here. It's good to be here sort of in Alberta. So far this year, I've been in in Paris once, and next week I'm going to Australia. Unfortunately, it's only the virtual version of that, and so that's hopefully after all of this is over, we'll be able to do some more traveling again, and I'll be able to see some people in person. So anyway, this is the next best thing, and technology certainly provides us with some great opportunities. So this is the presentation mainly dealing with feed grains. Later on, Brennan is going to talk about milling wheat and durum, and so that's what we're focused on now. David Derwin's going to talk about some of the things that you can do with this information, and so that's going to be later on in the presentation. So yeah, for whatever it's worth, you get to start with me. So the question is, what's up with feed grain markets? And I would say one word, in one word, it's China. There are many factors always that affect all kinds of markets, but this is one year where China has had an even a far greater impact, I would say, than in almost any other year that I can remember. And I've been doing this for I don't know, 20 some odd years now, and so this is the year where I've seen the most of this. So that's that's the one of the themes that we're going to be exploring, although we will be talking about the Canadian side, of course, too, and what's going on here. So we're going to talk first about what's happening this year and what's kind of set the stage for where we're going to be at next year. So in the last summer's crop set us up for almost 12 million tons of supplies, which was the largest that we've had in over 10 years. And that was that's a situation that should have started to weigh on the market. Any other year where we've had those kind of increases, and we had an increase in supplies in the previous year, and then a second consecutive one in this current year, should set the stage for some weakness in prices. But clearly that hasn't happened. Clearly that's going on, or something else is going on in the market. At the same time, these are some Canadian livestock numbers from StatsCan, and we show that these are January livestock inventory numbers. We show the continued decline in cattle numbers, and I'm not sure of the breakdown feed versus or beef versus dairy, but a continued decline in beef numbers, and hog numbers roughly steady. So in overall of those, and those are the two big consumers of feed. Overall, those kind of numbers should mean lower feed use in Canada and even more so in Western Canada. But yet we've got usage of barley way up this year. So went up considerably last year, both feed and to a lesser extent exports. And then in this current year that we're in, it looks like, based on the numbers that we're seeing so far, is that domestic feed use will be roughly steady, but the increase is in the export side. So when I start talking about China, that's where that factor starts to show up. And so when if we had supplies of nearly 12 million tons and our usage between feed and malting and exports, we're getting very close to that 12 million ton mark. And so that's what's driving the prices to where they are now. That's one of the factors anyway. So on the Canadian side, the other factor is that on the feed side, this is last year's breakdown. I think this is from Sask Ag, but the growing seasons were fairly similar in Saskatchewan and Alberta last year. And so what we had a much, much larger part of the crop as a 1 or 2 CW. And again, that set the stage for some very strong an export program, but didn't leave a whole lot of feed wheat for the Canadian feed market, so for Canadian feeders. Now that said, we've seen the price-wise, we've seen feed wheat in some cases, or in some ways, you could argue that feed wheat prices have actually been the force that's helped lift milling wheat prices. But I'll leave more of that to Brennan to discuss later. Canadian barley exports running at a record pace, or a near record pace for what we have on record anyway, going back, I'm going to say 25 years or so. And so we have nearly 2.5 million tons of exports already this year. That's to the end of March. And we've even seen in April and into May from the CGC weekly export data that that pace hasn't slowed down yet, and we would think that it would start to. We would think that just supplies alone would start to cut into that. There will probably be a significant slowdown in June and July, again, just because there's not much barley left to export. This just shows over the since then, week 33, I think, or is the end of, or I'm not sure exactly when the end of March is, but just in the last 4 weeks, we've had over 150,000 tons per week just in those last 4 weeks. And I need to update that a little bit more. But it looks like we've got some exceptional volumes. I believe for May, we're actually scheduled to have close to 700,000, or for April, I should say, 700,000 tons of exports. And so again, that will keep that pace going at extremely high levels. So it's not slowing down at all. And so that's the situation that we have. So this is what's driving it, of course. China, they will pass 10 million tons this year in their exports, and so that's a record pace. And we're going to slice and dice these Chinese numbers just a little bit more to give you a little bit of an idea, not just of what's happening this year, but then kind of what could happen for next year as well, too. So the previous record was in 2017-18, and this year it's going to be, it's already well over that, and is going to be significantly higher when we add in the May. Frankly, they've been importing the last 2 months. They've imported, I believe, 1.1 million tons per month, and so it's it's not slowing down, at least not yet. And so here's what's happening. These are Chinese imports, barley imports by origin. And so what you see in the chart is that previous record. I'm just going to go back to the previous slide. So 2017-18 was the previous record. And so if we go back in this chart to 17-18, that's June 2017 to May 2018, who was the source of barley during that time? Well, the red bars are Australia. And so Australia has been traditionally the major source of barley for China. And then in the time since then, they've really faded because they've had some big crop problems in Australia. But then in the last year, China imposed 80% import tariffs on Australia, just in my view, as a political exercise. And so China is buying huge volumes, but they're having to go to other origins. And so Canada, the yellow bars there, Ukraine is a major one as well too. France has been large, and now Argentina is starting to has been moving some volumes in recent months as well too. So that's the kind of situation that we've had, is this exceptionally strong Chinese demand, but Australia is shut out of that market. And so it has to come from everywhere else. And so that's what's done that. I don't have a chart to show this, but at the same time, Canada was exporting roughly 750,000 tons to Japan last year, and that has shifted over to Australia. Australia has picked up a whole bunch of markets in Southeast Asia, and then with the Saudis as well too. So they are moving their barley out as well. And then this chart shows Chinese grain imports. So this is not just barley. This is barley and corn and wheat and sorghum. And so what you can see is that over the last number of years, we've had volumes somewhere typically between 1 million and 2 million tons a month. And now the volumes are in the 4 to 5 million, 3 to 4 to 5 million ton range every month of those various grains. And so to me, that's a clue about the situation there, is that it's not simply the extension of a trend that we've had. And I'll show you another chart that will help explain that a little bit more. But it's not simply the extension of a trend or an ongoing movement. It's related, it's a specific item in the Chinese market that's caused that. And difficulty is, of course, is that we have no transparency there. But what it seems to be is that the 2020 crop in China was really hammered, probably a lot harder than anyone official is releasing. China has said a couple of times that last year was the 17th consecutive bumper crop. And we just know, I mean, even with irrigated acres, we know that's simply not possible. And now this year, of course, is projected to be the 18th consecutive bumper crop. So in my mind, this demonstrates more that it's a one-time kind of a situation. When we look at the vegetation index there, this was from last summer. And so we see some brown areas, and in the central, east central and northeastern areas where the large part of the crop production occurs for corn and for wheat and for barley as well too. But last year, the crop losses weren't related to drought so much. They were related to excess moisture, flooding. And so vegetation maps, because they show how green things are, and things typically are pretty green when you have lots and lots of moisture, they don't necessarily show that very well. So again, we were a little bit in the dark in terms of what their production capacity or capabilities were. So when we look at the situation for Canadian barley stocks, just to show the impact of the China situation, I got two scenarios there off to the right-hand side. And so 2021A is what I'm actually expecting for this year in terms of ending stocks. So somewhere around 400,000 tons, which is, I believe, is record low. I didn't think that pipeline stocks could actually get that low, but it looks like that's the case. And then the scenario B, the 2021B, would be if China had simply bought at the levels they had bought the previous year. So then suddenly we'd be probably around 1.6 million tons, which is toward the higher end. It's not a record, but it's a very, very different market picture if ending stocks would be 1.6 million tons instead of 400,000 tons. So essentially, the ending stocks are 1/4 of what they would have been if China would have just kept buying at their regular pace. The other aspect for the Western Canadian market is that U.S. barley has simply become way too expensive. And so in 2018-19, when we had a rally in the barley market the last time around, we were importing into Western Canada about 150 to 200,000 tons every month. And now this year, it's been almost every month has been 50 to 75,000 tons. And so far less available supplies of US corn coming in. And so that's tightened up the domestic side as well. So simply put is, despite the record barley prices that we haven't been able to really make any other substitutions. The other thing that's been happening is that we've actually been importing more barley from the US. And so this shows barley imports in the last year, in the current year, I should say. And so it's not huge amounts, but we've already hit 160,000 tons, which is about 4 times as much as what we've ever done in the past. And so those kind of things, again, help take a little bit of that. But essentially, the barley prices in the US, this chart shows elevator bids for feed barley in Canada and in the US. And so the Canadian elevator bids, currently around $280 Canadian, and the US elevator bids closer to $200 a ton Canadian. And so normally there isn't a whole lot of trade going on, but now that spread has gotten as wide as it has, it's attracting more of that in, and it's starting to push U.S. barley prices, feed barley prices higher, just because some of that extra demand from Canada. So this is what I was telling you about why corn isn't coming into the market. This is Lethbridge feed grain prices. And so that's the corn prices are the black line. So even though feed barley and feed wheat prices are at record levels, there's still a deal, or there's still a bargain compared to corn. And so people who are forced to feed something still aren't going to be going for U.S. corn. Even with the stronger Canadian dollar that we've had in the last while, it still hasn't allowed that spread between corn and feed barley and feed wheat to start to close. And so that's the kind of market situation where feeders are just unable to find any kind of volumes, meaningful volumes of alternate feed grains. Just this bit of a perspective. So I took a long-term chart. So this is using Alberta Ag long-term feed barley prices, and going back all the way to 1990. And so you can see how this year's feed barley and feed wheat markets stack up against previous rallies, and some very nice rallies in the past, but we're well beyond that now. And but we're also getting close to the end of the season as well too. So that's something to keep in mind too. These are posted elevator bids for Canadian barley for both feed and for malt. And as it says in the little quote there, sometimes malt does its own thing, but this year it really hasn't. So the feed barley has really been driving that market higher. And so what that's done is it's forced maltsters to beef up their bids in order to just stay in the market and to keep feed barley or keep malt barley supplies available to them. And so there isn't really any extra strength in the malt market beyond what is coming from the feed side. And so you can see that, every time feed barley moves higher, malt bids are forced to go up along with it. And so now we're again at the end of the season where there's no real active old crop trade going on for malt barley. And so those bids have quieted down. And so we could even see, again, these are posted bids. So that's the kind of market that's been doing that. So malt has been a follower this year, maybe put it that way. And one of the reasons why is because, again, as I showed you before with the wheat quality, on the barley quality, we've had lots of supplies of malt. And so there's been enough malt under contract. Again, there hasn't really needed to be any aggressive bidding to get malt. The higher malt bids have been related to the fact that they're just trying to keep the malt available to them as they go through the year and need their steady supplies. But there hasn't been any problems with quality that would cause those kind of stronger malt prices. These are some malt and feed barley spreads in various markets of the world, and it's in most key markets, most exporting markets. And what you can see is, so this is malt prices minus feed prices, and so you can see in almost every one of these countries, in every one of these countries, is that this spread is narrower or is smaller than it has been for the last number of years. And so it's not that malt is a weak market, it's just that feed has been so much stronger. And so the feed demand is what's been pulling all of that out. And so it's not just a Canadian situation where we have these unusually small malt premiums. That's a situation that is showing up in all kinds of markets. And truth be told, there were very, very few quality issues with last year's barley crops in any parts of the world. And so again, that allows those malt feed spreads to collapse in most cases to zero. In the case of France, there's not much going on with malt, and so it actually appears to be at a discount. So you could say, well, so that's all fine and good, but let's shift the focus into next year, because this year is almost wrapping up. So got some slides, and I haven't talked much about corn so far this year, or in this presentation, I should say. But one of the big elephants in the room always is the U.S. corn market, and so the USDA has factored in corn acres for this year at about 91 million. But there have been some other estimates that have been as large as 97 million acres. And that's a big, big difference. And so we sometimes wonder, why is the corn market so volatile? And that uncertainty, 6 million acre difference in the U.S. corn crop, aside from any variability related to yields and so on and so on, that's a big unknown. And so we will find that out or get a better estimate at the end of June, when the USDA releases its acreage numbers that are based on farmer surveys. And so we'll see whether it's 91 or 97 or probably somewhere in the middle. And then that'll trigger a whole bunch more volatility in the market. When we look at the kind of the world corn balance, so this is the blue line is production, and the red line is total use. And so we see that every year we frankly need a record corn crop just to keep up with the usage side. And so what the USDA anyway is looking at in terms of a global corn crop is that production is going to ease slightly ahead of usage again. And so what that does is tends to put a little bit more corn into ending stocks, but there really isn't much of a cushion there. There's global stocks are tight, and there isn't much of a cushion for any kind of real production problems. One of the key issues is that the USDA is still using a large number for the Brazilian corn crop, and then most observers are expecting that the Brazilian crop could be, maybe at least 5 million tons smaller than what's shown on there, and so from South America anyway, from that perspective, we're looking at a smaller increase, if you want to call it that. Ukraine is a very large corn producer or corn exporter into China, so that for that Chinese market, and they're expected to see some improvement. So they will help fill some of that Chinese demand going into next year. And then Argentina up just slightly. But world corn ending stocks have been declining. The current year that we're in is the fifth straight year of, or 4th straight year of declines. And then only a small increase is expected for this year. Of course, China apparently, and we don't know, of course, but according to the USDA, China is holding at least two thirds of those global ending stocks. But we have no way of knowing whether those numbers are true. There have been times in the past where there have been massive adjustments later on that the USDA will suddenly take tens of millions of tons out of stocks, or at times add them as well too. And so it's really I don't like to admit this, but there's really no way of knowing what's there. And of course, China has its own vested interest in saying that there are lots and lots and lots and lots of stocks just to keep global prices down. So there's lots of skepticism around that. If we look at the barley production outlook for this year, these are some major exporters. And so again, these are some of them are USDA numbers, some of them are not, are from other sources. But we're looking at roughly steady barley production for next year, up in Canada, but down in some other ones. And so Australia will probably, well, they're looking like a pretty good crop right now, but last year they had a massive crop. So just a normal return to more normal yields could drop them down as well too. But overall, not much of a change in barley supplies in major exporters. So when we look at some of the weather situations for the current year, the USDA puts out their drought monitor, and right now that they're saying, so this shows the green parts of the map are where barley is grown, the main areas where barley is grown, and in North Dakota and in Montana, there are good chunk under drought. So roughly 57% is in an area experiencing drought. That's an improvement from last week where it was 62%. In Europe, sorry for the fuzziness of this map, but there really aren't severe issues. It looks like there are, but for the most part, those light blue areas in there are related to delayed development. So some colder temperatures. There are areas with some excess moisture and a few with low moisture, but for the most part, there aren't problems seen with the European crop. So that's going to put more barley into the world markets as well too, particularly from France, but from some other countries as well. In Ukraine, there are some dry areas, but they're more in the west of the country. Barley is grown more in the east, and there the Ukraine is looking at normal to above normal precipitation through the growing season since April 1st, this map shows. So their barley crop should be fairly sizable as well too. In Australia, this is rainfall from the beginning of January to the last few days. And again, the main production areas in Western Australia and southeast, New South Wales especially is looking good. Some of Queensland is looking favorable, but some drier areas there as well too. And there are dry areas, but the main barley producing areas in Australia are looking fairly favorable at this time. When we dial in on the Canadian situation, StatsCan said that acreage would be up 13-14% from last year. And if we have average yields, it'll put the crop just a little over 12 million tons. And so that would be the biggest crop since 2004 or 5. And so again, we've had some decent production increases the last couple of years, and this one looks to be even larger. These are based on just so you know, these are based on average yields at this point. It's too early to really move off of those, and based on some of the rain that we've seen in the last little bit, you know, we were probably leaning toward trimming some yields. Now we're still comfortable leaving it around average until we know a little bit more. This is the percent of average precipitation in Western Canada from April 1st to May the 20th. And so this was the reason why we were thinking, yeah, maybe we'll have to trim those yields if things don't improve soon. So it shows, you know, widespread serious moisture concerns. And then if we dial it ahead, though, to the 24th, this is the same map, but just adding 4 more days to it. And again, one rain isn't going to solve everything. I know that. But the situation has changed significantly from that to that. And there are areas where we are hearing now that you can probably turn off the taps. You know, some places could still use a lot more, and there are still some dry areas, but the situation has changed significantly just in the last week, and so and that's still plenty of time for the crop to develop. So what does that mean for next year's market? And as I say in my little subtitle there, it depends, as it always does with any kind of analyst or economist. That's just what we say. These are December corn futures. So the market had been gradually trending higher, very gradually trending higher. But what we've seen is this overheated phase here that's really taken off. And then the sell-off has occurred. And so we're back down. Yesterday we were just over, or we touched on $5 a bushel for December futures, have bounced off of that. But I'm not sure that that's, you know, the crop situation in the U.S. is largely going to determine whether the next move is continuation of that lower move, or whether it's a real bounce back. And so far, there aren't real concerns with the U.S. corn crop. So the planting progress, the black line with the yellow dots, that's this year, is really tracking along with average. So no concerns about timing like we had a couple of years ago, which were just severe and still ended up getting a decent crop, mind you. And then in terms of those corn areas in the drought, roughly 24% of the corn is in an area experiencing drought. So, you know, that would be in places like Iowa, northern Iowa, southern Minnesota, a bit of, and some Michigan as well too. And so we've got those kind of areas, but still not enough to cause the market to rally, at least at this stage. When we look at Canadian barley supplies, we're going to have supplies. We'll have a very, very low carry-in, but with that 12 million ton crop, we'll see another increase in supplies, even with the small carry-in. And if the yields are plus or minus, just in terms of the variability that comes with changing yields, would mean 600,000 tons, either higher or lower. And so that's right now we're penciling in that next year we'll have 1.4 million tons more barley with average yields. So just in terms of some scenarios, this is not labeled all that well, but our export scenarios, so this is what we've penciled in for 2021, is right around almost 3.5 million tons of exports. So that would be extremely high. Our base scenario is that those exports would remain steady, so we wouldn't see much of a change. There could be a small increase. That's this high bar here, this second from the right, and that's where we could see that. But there's also a chance that exports would drop back to levels closer to what we had in 1920 and 1819, those kind of levels. And so that's the depends part of, that didn't sound right coming from a guy in his mid-50s, but that's the depends part of the outlook. So the question is, of course, is China's are China's grain purchases a trend or a one-time wonder? And so this shows cumulative grain imports, China of wheat and corn and barley over the last number of years. And so what we've seen is in the last 5 years, that's ranged from about 12 million tons to a high of about 18 million tons in 2015-16. And so what we've got is this kind of a situation where Chinese imports have been roughly steady. And then this is this year's, where we're suddenly at about 27 or 28 million tons. And we're off to an exceptionally strong start in 21 as well, too. But what this tells me, I'm leaning toward more the idea that the current year that we're in, that we're just finishing up now, is a one-time situation where it was really caused by Chinese crop failures in 2020. Now, there will be some carryover, there already is, into this current year, and there will be some carryover until more of the Chinese crop is in. Their 21 crop is in the bin. And so we'll see some of that, and also some rebuilding of supplies. But to expect a repeat of a 28 million ton import program, to me, is unrealistic. That the trend is roughly steady, give or take. Some variability here over the last few years, but I'm not counting on that exceptionally strong import program again for 21-22. So what that means is that there's some potential here. When I showed those export scenarios before, we had this base scenario where it's based on steady Canadian exports of barley. And then the next one is where if we see a small increase. But there's a potential, if we were to slip back to 1920 exports to those levels, suddenly we're at about 2.5 million tons of ending stocks, which is more than comfortable. Even if we keep exports steady, we're going to be going up to about 1.4 million tons of ending stocks, which is higher than we've been the last 3 years. So that's the situation that we have now. So just to wrap it up, in case you're wondering about the timing, just to wrap it up, a few main points is that we have these razor thin supplies, not just in Canada, but in a large number in almost every exporter. So that's the situation that we have there. And China has been scooping up any kind of feed grains that it can to massive degrees. So the critical question is what China does this next year. And they are already buying lots of new crop corn and barley. So that is a positive sign for next year. But again, I think that's part of the rebuilding of stocks. But what happens in the second half of 21-22, which is the key piece of the puzzle. So will they keep up the pace or slow down? And I'm a little nervous. That tends to be my nature. I'm usually cautious, but there's also no room for weather problems. And so we have some better weather now in Western Canada and some decent weather in most other producing areas. And there's still some risk in the market if that buying slows down. So that's all I have. Appreciated the time and the invitation. And here's the shameless plug. We've just introduced in the last month a farm market letter. So we'd be happy if you'd come to our website, sign up for a free 4-week trial. We want people to take a look and be satisfied before they subscribe. We also have a small grains letter that deals specifically with cereal grains, but we'd be happy to do that. And again, thanks Geoff and Megan and Brian for the invitation to come and sort of join you out in Alberta. So thank you.
Thank you very much, Chuck. And again, great presentation. Yeah, no, you've mentioned a couple of things there. That flood in China, that was shocking to watch as it rolled out on TV. And yeah, it's not surprising given that I think I saw corn with knee-high water around it, that it was that impactful. Moving on to our questions. So for the audience, if you'd like to ask a question, the Q&A button can be found at the bottom of your screen. Please enter a question and I'll read it out to Chuck. So Chuck, one of the things I don't think I heard in your presentation was a whole lot of talk about the hog population in China. And that's where our first question comes from, that China is growing its hog population in 2021 and moving forward. And so there's general expectation that the feed demand will remain strong. Um, but this could have the impact of reducing China's demand for overseas supplies of hog meat. Is that possibly going to have an impact on, or how will that have an impact to Canadian hog farming? And could that lead to sort of a cascade effect where domestic demand for feed declines?
Yeah, that's a really good question. I readily acknowledge that I'm not a livestock analyst, and so I don't follow those as closely. Um, as much as the grain situation in China is not transparent, so is the hog situation there. And that being said, I think there is general acknowledgement from most observers that they are rebuilding their hog inventories. I'm not sure that they are going to be moving to even higher levels. I think it's more they're still in the transition phase after going through the African swine fever situation of rebuilding hog inventories. And so again, that's why I showed that chart of Chinese imports of corn and wheat and barley over the last 5 years, because that's kind of the prior case, before African swine fever, and then in the when they had their worst issues, there was drop off in some of those feed imports. Um, but again, I don't think that the size of this year's increase in feed grain imports is proportional to that rebuilding of that hog inventory. So yes, it should have triggered some increase in feed imports, but not as much as we've seen. So again, that's why I think that's a weather issue. In terms of the impact on the Canadian hog industry, boy, I wish I had my friend Rick Bergman, who's the Canadian Pork Council guy here with me, because then he could answer those kind of questions. But I'm just not as familiar with the trade situation between Canada and China. I think we've seen some bumps. I think maybe what we'll do is we'll return to a more normal trade pattern with hog inventories, or hog or pork exports to China. So I don't know that it's going to be a new situation, just more of a return to a more typical one.
Okay, thank you so much. You may have answered this next question sort of at the end of your presentation there, asking about how long feed barley and wheat premiums could remain. I think you mentioned that you see this as a bit of a 1-year scenario. Is that correct?
Well, a 1 year that's going to have some carryover into next year. My expectation, I mean, we already see that, new crop bids for feed barley and feed wheat are sharply lower. Typically, the seasonal pattern of barley prices tends to actually peak early to mid-July. But I think we're going to see that transition lower a little bit earlier. We're getting into that period anyway, and wherever possible, people are going to be looking for other, either pasture or whatever. Again, not a livestock analyst, not a livestock expert, but those kind of alternatives. So I think we're going to see that. Where I expect the transition, or if we're going to see these heavier supplies start to weigh on the market, it'll be later in the 21 calendar year, and then into early 22. If China continues to keep rebuilding their grain inventories, it could push that out a little bit further. But really, I'm not expecting it to last longer than that. And of course, we could see problems develop with the U.S. corn crop, and that could keep them elevated. But under normal or whatever average kind of conditions, that's kind of the time frame I'm looking at.
I might combine a couple of questions here that have come in. We've got you mentioned that we're benefiting, at least into China, from their ongoing squabble with Australia, and squabble's putting it lightly. And however, that having that scenario resolved, I would think presents a risk to us, does it not?
Well, it would certainly. We're also shut out of Saudi Arabia, so our options would be severely limited if they were to resolve that. I don't know that based on the current governments in either Australia or China, they're both pretty combative. So, I wouldn't hold my breath on a resolution to that, but that is a key risk to the outlook, certainly.
One other piece that was noted here, are you willing to throw some price ranges associated with some of your end of year scenarios?
No. uh, well, you know what?
The classic question for an analyst: what's the price going to be?
Oh man, I just put a little thing on Twitter the other day for the canola market, and all of the moving pieces and all of those kind of things. If you could predict about 15 or 20 various outcomes in the future and predict all of those accurately, then giving a price range is. And I know why people ask that question. It's a legitimate question. But the way that I see the market is that we can see some things right now. But there's a lot that's in the fog. It's further out in the fog, and we only see what's going on. If you're driving in fog, you only start to see things, as you approach them and as you get closer. So that's my namby-pamby kind of answer to that kind of question. So where we're seeing new crop barley prices right now. If I'm remembering right, it's maybe around 260 or 270, maybe even 280 in southern Alberta for some new crop delivery. And I think those are realistic. I think those fit based on the current developments that we can see. But yeah, the U.S. corn crop, Canadian barley crop, Chinese buying levels. I think there's more downside risk than upside. So that's as far as I think I can go.
Yeah, if only we had a little bit more foresight on weather and politics, eh?
Gee, yeah.
There's another question here about Russia. So Russia's wheat output is expected to fall in 2021-22 to 77.5 million tons, which is projected to be more than offset increases in corn and barley production of 6 to 7% respectively. The USDA forecasts Russia's total grain production to decline by 5% to 118 million tons in 2021-2022. If this happens, does it impact Russian barley exports, or does it have any impact on Canadian barley exports for the upcoming year?
Yeah, I didn't address the situation in Russia. I was more looking at Ukraine, and partly because Ukraine is a larger supplier to China. Again, that big variable in the market. But yeah, there are concerns, a little bit of concerns about Russia, of course. That's another one of these not so transparent markets. Although there are at least some private analysts. Their private analysts haven't been thrown in jail like they have in China. Oops. But that kind of a situation could have a lesser impact on Canadian barley exports. And the reason I say that is because Russian barley exports tend to move more into Middle East, some North African countries, and those kind of areas. And so those aren't markets that Canada has played in all that much. As long as China continues to buy Canadian barley, I guess we're going to be focused mainly on that. If we get shut out of China, or reduced in China, or tariffs are applied, or something to that effect, what we would have is then we would need to compete more aggressively in those markets where Russia is. So it could provide a small benefit if they have less barley available to export next year.
Yeah, I do remember from some work over there that they, the logistics costs of getting a barge. I think it was from Rostov-on-Don to Jordan. It was a 3-day turnaround,
Mm-hmm.
and it was just it was very difficult to be competing with from the side of the world.
Yeah.
It'll also be interesting to see where that barley goes in. I know they've been looking on increasing their own livestock herds the last several years, so that might end up going into the domestic market. But we'll
Mm-hmm.
see. We have another question here. This is around malt growers. So we have a high percentage of dedicated malt growers in Alberta. What's your best marketing advice for them this year, given what the price they can get in the feed market? So I'm assuming that's looking at new crop, as I'm assuming most old crop malt needs are met.
Yeah, that would be, I'm sure Tom's asking about new crop. In my mind, I don't, unless there's a real harvest wreck, I don't expect to see large malt premiums next year as well either. If we have this 12 million ton crop out there, it's going to supply more than enough malt than what's needed. Now, I know the malt feed spread for new crop is also, it's maybe about 50 cents, whereas a more traditional spread between malt and feed is about $1 a bushel. And so, I don't expect to see, again, without a severe weather wreck with the 12 million ton crop, you'd need to destroy a lot of quality out there just to limit malt supplies. So, the new crop inventory or new crop bids that are out there for malt, in my mind, are still pretty favorable. The difficulty is, and it's human nature, is that we get fixated on what's happened in the near past. So 2020, 21, and even 2019, 20 was not a bad year either. But we get that tends to be our frame of reference, and so. If we look further back and we would look at what bids are for malt barley and feed barley, new crop bids, growers would be ecstatic over those kind of prices, in the longer term past, and so it's difficult to get beyond the fabulous experience that has happened in 2020, not for feeders, but for growers, the fabulous experience that they've had in 2021, and to think beyond that. But I don't think we have the same market factors lining up for 21, 22 as we do for 2021. And so I do think those new crop values are justified and are reasonable given what we know now.
You're presenting I think I'm hearing a lot of potential risks coming up in the next year, which is understandable. I mean, this is farming after all.
Yeah.
Nobody knows what's coming up, but I might close this out just asking a question on what might be one last bright spot in the year if you're selling into the free feed markets. You mentioned briefly that there's some concerns around the Brazilian crop for corn. Do you have any extra information you can share on what's going on down there?
Well, I mean, the crop down there is progressing. I think that's what caused, if we go back to that chart, if you remember that chart that I showed of December corn futures, and nearby futures as well too, is I think that fear about that is what caused that earlier spike in corn futures. That was part of that rally, or a large driver of that rally, I would say. And so I don't think the crop has improved at all. But the market is looking past that already. So it's factored that in. Now it's looking, the main thing right in front of traders is the U.S. crop, and with only small threats to that U.S. crop at this stage. Who knows what can develop, but with only small threats to that, that's what's really caused that market to tip over again. And so there are expectations, especially if we have more corn, U.S. corn acres, and decent yields. If it's more than the 91 million acres, I think there's some expectations for U.S. corn to backfill some of that Brazilian crop.
Right. No. So then all eyes down south.
Yeah.
All right, Chuck. Well, I want to thank everyone for the questions and discussion. It's been great to see the engagement with our speakers, and I strongly encourage you to pick the brain of our various experts today. So now we're going to take a quick break. We'll be back in about 6 minutes to return. So please return at 9 a.m. for our next block of speakers. Welcome back, everyone. I hope you have your coffee topped up and ready to go, or tea if that's your preference. We are moving on to our next block of speakers. Next up, we have Lisa Nemeth, who's the Director of Market Support and Training with Cereals Canada. Lisa will be presenting on the work Cereals Canada does on behalf of farmers to promote Canadian wheat. The Alberta Wheat Commission is a member of Cereals Canada, and Cereals Canada helps provide alignment and coordination on key value chain priorities such as market development and advocacy. Take it away, Lisa.
Great, thank you, Geoff. And it's much appreciated to have this opportunity to speak today. So I'm just going to share my screen. I'll just double check everything is viewing okay, Geoff? Great.
Yep, we're seeing it. We're clear.
Thanks. Okay, so I am going to start today just talking about, first of all, okay, there we go. Got my page turn going. I wanted to start off today, first of all, by talking about some of the initiatives that Cereals Canada has currently working on, and it's not everything, but I was focusing more on the ones that we would be using as we're doing market support. So, and then move into the markets that we will be, that we are working with this year specifically, so that you can understand the work that we're doing around the world to support the sales of your wheat. So, So the first initiative that I wanted to highlight is the digital market development that we've done. This started last year with the new crop webinars, which we were very successful in holding on the website canadiancereals.ca. This website was used to host 5 webinars for international customers and also for domestic customers. And that was around new crop. And we also used it to host 2 webinars earlier this year, one for customers, which was a 5-part series. And we also hosted a producer webinar to recap what was held for new crop. So we are in the process right now of evaluating the surveys that came out of those webinars to learn what we can optimize for next year. And we are also doing a follow-up questionnaire to customers to get their input. This is to optimize the web site and also to optimize how we deliver the new crop this year, which will be, again, online, and other programs that we will host on that website, which are coming this year. So in no particular order, the following items are also what we're working on: customer technical support, which is my comfort zone. And that's what I'll be diving into a little bit deeper in the rest of the presentation. Within that, we're doing work on international wheat analysis. And that includes looking at samples of Ukrainian and Russian samples from early, mid, and late crop to understand the quality coming out of those markets, because a lot of the customers that buy Canadian are also buying Black Sea wheat. And it allows us to understand how Canadian wheat is being used with those products and how we can best support customers. The programming I'm going to get into in a little bit more detail. Another strategy or initiative that producers are very familiar with is the Keep It Clean initiative. And why we talk to customers about this is because we want to tell them that the producers in Canada are understanding that what they do on their farm matters, that there is an initiative to assist producers with keeping their product clean. And we do talk to customers about this to ensure that they know we have an initiative to manage all the usage of inputs in Canadian production. There also is a discussion that we have on the wheat nutrition strategy that has been ongoing for quite some time. And it is to gather scientific-based information on wheat nutrition, obviously, and that is to be able to support customers mostly domestically right now, but the information is also certainly available to other markets. And we have had interest from some Latin American customers for that information to support this type of initiative in their markets as well. And then just a couple other things I wanted to mention about initiatives that we aren't actually speaking to customers on, but we have supported and worked with the Canada Grains Council on the consultations for Health Canada on gene editing. We had a submission that went in on Friday, sorry. And then there is another consultation coming up through CFIA. And we will be working to provide feedback with the Canada Grains Council on behalf of cereals on that initiative as well. That's will be coming up in September, so lots to talk about before then. We are very involved as an organization on free trade agreements and working to support whatever information needs to go into support free trade, in particular of late, the United Kingdom's free trade agreement talks. We've been supporting the information and how that would impact cereals industry. And then, of course, other countries as well. And then lastly, I just wanted to mention that we are going through some market research that was done through a consultant to look at all targeted international customer markets, to look at the status of what their imports are and any issues that might be impacting Canadian wheat going into those markets. We've just gone through the review of those documents, and the final presentations will be coming up in June for that to support the marketing initiatives that we're doing around the world. So I do want to now go in to a little bit more detail on the market development programming that we're doing. And as most of you will know, that most of our programming in the past has been done in person, whether it's in person in Winnipeg, in our facilities here, or as outgoing missions. But last year and till the end of 2021, we will only be doing online programming, and those will be done by webinars. We have three types of programming. One is technical exchange, which we stick to supporting mostly technical information, crop quality, end usage, milling, and analysis. When we look at international programs, we do delve more into some of those other initiatives that I mentioned on the previous slide, as well as provide a market outlook, just to round out the program a little bit more. And then, of course, the big initiative in the fall will be the new crop seminars, which, because they're online, they are targeted by region, language, time zone. And so those will be ongoing again, starting up probably in November. We are also this year having what we've termed customer success meetings. I think our overall goal this year is to really try and maintain the customer interaction that we've had. So important to have those relationships, continue those relationships so that customers know they can come to us and know who to come to if they have any questions, and we can support them in their purchases. So we are setting up some meetings with key customers just to have a conversation around any topic they desire, and also to provide them a base of knowledge of quality this year and support. We will also be looking at doing some hot topics when they arise. So that would be, for example, if we have downgrading factors this year that are unique from previous years, we'll do some supporting material on that. Of course, we always are doing technical support on a daily basis through one-on-one interaction with customers. So we're always on 24/7 with customers around the world. So now I just want to quickly go through the regions of the support that we're providing and let you know where we're targeting our support. We do focus in on core markets. So for Africa, the core market there is Nigeria. And for Africa, the region as a whole, we are going to be doing a technical webinar for them so that we can invite anybody from the Africa region in their time zone and provide them with information and knowledge of who they can go to for technical support. We will be focusing on the flour mills of Nigeria for a customer meeting, as they are the largest purchaser in Nigeria and they are the largest market. And another thing we will be doing is, we did this last year as well, there's an African milling school in Kenya, which we have used prior to do an actual workshop. We are going to speak to their students there and present some information on Canadian quality, as they are going to be the millers of the future in Africa. We are also, and we did this last year as well, going to provide some CWRS for their milling school so that they can use that in their programming. And it's a great way to still have Canadian wheat quality demonstrated when we can't get into the market ourselves. We have a great relationship with the milling school, and they are going to provide that for us. So the Canadian Cereals Customer Webinar Series is similar to what we did last year. It will be open to all customers around the world and offered at 2 different time zones. And then I've mentioned the new crop seminar. So those 2 will be done for all markets. Asia, a huge market for Canadian wheat. You can see the number of core markets there. Indonesia will be the largest, last year was the largest purchaser. China is going to overtake them this year for sure. So we are offering support also to Bangladesh. Bangladesh is the large purchaser of Canadian wheat, not as sophisticated market, looking for technical support. And we are going to update a guidebook that we did with them, I believe it's almost 10 years ago, to provide additional information and support. China, we did a program for them last year, so we're going to do a support meeting for them this year. We are doing a webinar for the milling organization Aptindo in Indonesia. And then Japan, a technical webinar, always a great conversation. We learn a lot from them as well whenever we meet with them. And Prima, we actually had a conversation with them last night just to catch them up on what's happening here and us and them on their business to us. In Europe, we do not have what we would classify as a core market, but the United Kingdom, of course, is very important, and Warburton's plays a large role in that. We have an excellent interaction with Warburton's because we are doing their quality testing here at SIGI. And so we do not have any programs specific to them. Of course, they will be invited to new crop webinars and the customer program series in the new year. Latin America is another huge market. And I should have mentioned these first slides are not including durum wheat. I forgot to say that at the beginning. So we'll be coming to that right away. Latin America has Peru, Colombia, Mexico, and Ecuador, all very large markets. We did not do a Latin America technical webinar last year, so we will be doing one this year. And we can target content to include things like CPS Red, which is going into this market as a medium protein wheat. In the Gulf and Turkey, we have UAE as the core market that is, for the most part, Algeria. Last year, you'll see Turkey bought a lot of durum, so they will show up more on that slide. But UAE, large market, and the support will again just be through the 2 international programs. For durum, we have the core markets, Algeria, Italy, and Morocco. Italy is huge this year. So we are going to have an international durum webinar, which we did not do last year, and that will be to support these very important customers. Turkeys, you can see, backed off quite a bit this year from their purchases, but they are still buying. So we'll be targeting all of these for that program. These are just the remaining durum importers. Again, they will be invited to that program. So I just also wanted to mention a very important part of the new crop sessions are providing the quality information. Cereals Canada does do a harvest assessment. The harvest assessment is done in collaboration with the Canadian exporters, and you can see the collaborators on this screen. There's 9 of them. We got over 110 composite samples from our collaborators last year. You can see the regions that we requested to get samples from on the CWRS composite regions. So that is for CWRS only. One thing I want to point out is there is an east-west divide that we are currently reviewing, as we have received comments that the eastern region really should be divided at the Saskatchewan-Manitoba border. And so we are just consulting to see if we should be changing that border further east so that we will have our divide meet what the exporters are shipping. And you can see on the right side, the composites that we make really dependent on the quality of the year, but those are the composites that we go in planning to request, and then we revise as we get closer to knowing what the quality will be.
Lisa, just in the interest of time, I might ask you to offer your final thoughts here.
Okay, this is my final slide. So this is the programs that we are planning for domestic, and this is for producers. So we are hoping to do in-person combine to customer programs, and then again, get our staff out into the country to provide additional information. My last slide is just to remind everybody about canadiancereals.ca. And this is where a lot of the information on the programming can be found. So that's it, Geoff. Thank you.
Thank you, Lisa, for that wonderful presentation. I've been on a couple of new crop seminars myself, and they really are a key promotional event for our end use customers. So it's great to hear that those are continuing online. There's always a lot of interest around the care our farmers put into their wheat production. So for the moment, I'm going to put questions on hold for Lisa until after our next presentation. So again, thank you, Lisa. Now we have Peter Watts, the Managing Director of the Canadian Malting Barley Technical Centre. He's going to be presenting on their promotional work, which benefits Canadian barley farmers. Alberta Barley is a member of the CMBTC, which delivers a suite of technical expertise to the entire value chain. Peter, you're up.
Thanks, Geoff. Good morning, everyone. I got my presentation here. Let me know if you can see that okay, Geoff and Megan.
Yeah, that's coming through clear, Peter.
Okay, great. Well, thanks very much to Alberta Wheat and Barley for inviting the CMBTC here this morning to talk about market development programming. Got a few slides here for you this morning to talk about what we're doing. It was very interesting to hear Chuck Penner earlier talk about the situation in the barley markets globally. It really has been a remarkable year for barley in Canada in terms of our production, export program, and prices, and it looks like we're shaping up for another good year next year. So it's been really exciting times in the barley world. So Chuck talked about the importance of China in his presentation, and just to emphasize, this shows you Canadian barley exports in 2021 by destination compared to 2019-20. And you can just see really the dominance of China as an export market for barley. About 3 million tons expected to be shipped to China this year. That's both feed and malting barley. So about 90% of our total export program, followed by Japan, the US. And then in 2019-20, we did export for the first time in many years, malting barley to Mexico and some malting barley to Argentina as well. In terms of our processed malt exports, the US is our largest market by far, accounting for 50% of all the malt exports. This is 2019-20, followed by Japan, Mexico, which is really a significantly growing market, and then some smaller markets like Brazil and South Korea. So that just gives you a rough idea of where Canadian barley and malt products are going. In terms of the market development programming at the CNBTC, the outgoing missions are certainly one of the critical market support functions that we carry out. This is a picture from a visit that we made to Dalian, China a couple of years ago. One of the biggest malting companies in China, Xinzhi Dalian. And this is an opportunity for us to talk about new crop quality. Each year, we typically do these missions in the fall, in October, November, and also to talk about new varieties, new Canadian malting barley varieties. So the outgoing missions are obviously a really important part of the market development support. However, in 2021, everything shifted online. So the new crop promotion was done through webinars. And so we held our webinars with companies in China and internationally, again, to talk about, the crop quality from 2020, harvest progress, and new malting barley varieties. Incoming missions are important as well. We invite customers come on programs and visits. This is a picture of our Director of Operations, Dr. Yushu Li, touring Fan Wei. Mr. Fan Wei, the president of Qingdao Brewery in China, so one of the largest breweries in China and in the world, paid us a visit a couple of years ago to learn more about Canada and Canadian barley, malting barley in particular, and talk about opportunities for collaborations. So the incoming visits really critical. This is a technical mission that we carried out a couple of years ago for China in Mandarin here in Winnipeg. We had about 10 technical people come from some of the largest malting and brewing companies in China, spent a week here in Canada. Of course, again, in 2021, the programming had to be reoriented online. So we've been carrying out training programs, through digital platforms like Zoom and Microsoft Teams. So this is a training program that we did recently for a new malting company in China called Highline Malting, and they're just building a new plant, which is becoming operational in August. In terms of the market development, marketing support, one of the most powerful tools that we have is the new crop tours that we carry out. This is from 2018 in the summer. We had 15 representatives come from 8 of China's largest malting and brewing companies to visit farms in Western Canada, just right around harvest. You can see we're in Rossern, Saskatchewan there, visiting the Enns farm, and a field of Copeland barley that was just starting to be harvested. And this is a wonderful opportunity to bring farmers and end users together so that the end users get to see where their raw materials are coming from, and the producers have an opportunity to meet the people that are buying and using their barley. In 2019, we did a North American new crop tour in collaboration with Alberta Barley, called the Maiden Canada Tour. And so we had about 35 people come from across North America to tour some farms in Alberta. You can see there the McAllisters, Wade, Scott, and Wayne on the bottom left there. We visited the Antler Valley farm during this tour. We visited the Hamill farm in Red Deer, Alberta. And we also visited the Lenz farm, I believe, on that tour as well. So it's an opportunity. These new crop tours also a really great opportunity to talk to our customers about new varieties, so they can actually see them growing in the field. Varieties like Connect, Bow, and Fraser that I'll be talking about in just a minute. And then, of course, in 2020 again, not able to do the new crop tours, so we pivoted to online platforms. We created a web page called barleyharvest.ca, where we posted images and videos of the crop year and the harvest, and you can visit that page anytime. We'll continue to do that in the future. We post an interactive map where people could see where barley is grown in Western Canada, and then the quality from each of the growing stations where we were sourcing our samples from. Finally, one of the things in terms of market development that's important is for us to understand the end-use markets and our competitors. We did a report this past year on Canada's competitiveness in China. We sourced samples. We did a survey of Chinese malting and brewing companies. We also sourced samples from Australia, one of our main competitors in the malting barley space, at least typically when there's not an embargo on their imports, to evaluate their quality and compare that with the quality of Canadian malting barley so we can see how we stack up against the competition. For the second part of my presentation this morning, I just want to talk a little bit about the acceptance and adoption of new Canadian malting barley varieties, as this is obviously really critical for the competitiveness of Canadian malting barley in the international market. Canada has a lot of malting barley varieties registered at any one time. You can see it here. There's about almost 20 malting barley varieties that are being grown commercially today in Western Canada. And we all know that we still rely heavily on two quite old varieties, AC Metcalf and CDC Copeland. And more recently, AAC Synergy has become a very important variety in the malting barley sphere. But if you look on the right in the yellow, you can see the new varieties that we're now promoting, like CDC Bow, AAC Connect, and CDC Fraser, in particular, that were registered now about 4 or 5 years ago. And then some of the newer varieties like Low, Copper, and Churchill, and more recently AB Brunette that we're starting to test at the pilot and commercial scale and promote to customers. So these are the new suite of new malting barley varieties that are going to help keep Canada more competitive. And our challenge now is to get them accepted by the end users. So the way we do that is through a number of steps. Initially, when the varieties are registered, we do evaluations here at the CNBTC at the micro and pilot scale. We do both malting and brewing trials. We generate technical fact sheets that are translated into other languages to distribute to the end user in the early days to start to get them familiar with these new varieties and allow them to review the technical characteristics. We start to distribute samples in those early years, small samples, 2 kilograms up to 20 kilograms of new varieties. We send to the end users around the world so they can do their own internal evaluations at a micro scale. We also do tailored pilot scale trials here at the CNBTC. So we work with the end users. They'll provide us with their processing protocols and target quality specifications, and then we can evaluate them here at the CNBTC and see which varieties work best for their operations, whether it's in China or other countries in the world. The next stage is as production grows of new varieties, we will actually work with the shippers to send containers of new varieties to be tested in commercial trials on site. Typically between 800 and 1,500 tons of a new variety would be shipped to allow end users to do production trials and see how those new varieties perform within their own facilities. We also established a new variety acceptance committee to help facilitate the process of new variety acceptance in 2019 in collaboration with the Brewing and Malting Barley Research Institute. And this variety acceptance committee is made up of end users primarily in Canada and the US who share data and experiences with new malting barley varieties and provide projections for demand that we supply to the seed companies to make sure we can have enough supply to meet demand in every given year. That's always a challenge. The producers don't want to, seed producers don't want to produce too much seed if it's not going to be purchased. But if we don't have enough production at a commercial scale, it's difficult for us to supply the end users with the new varieties. So these are the steps that we take to encourage new variety acceptance. We've had some success in recent years with the new varieties. AAC Connect, CDC Bow, CDC Fraser, CDC Churchill, and CDC Copper are now being used or trialed by Canadian malting companies. Anheuser-Busch North America has accepted AAC Connect and is trialing CDC Bow and CDC Fraser, and we expect those to be approved this year. Qingdao Brewery in China has accepted AAC Connect and CDC Bow, as has Supertime Malting in China. and they are also trialing CDC Fraser right now through container shipments that were supplied in collaboration with the CNBTC and the shippers this year. Anheuser-Busch China, a very important buyer as well, is now including AEC Connect, CDC Bow, and CDC Fraser on their tenders, which is a really big development. And North American brewers have accepted, several of them have accepted AEC Connect and are trialing some of the newer varieties that are most suitable for the all malt brewing sector, like CDC Copper and CDC Churchill. So finally, this is about my last slide. One of the things that we do here at the CNBTC in terms of marketing support, we evaluate every export cargo of Canadian barley that's shipped out of Vancouver. We process it here at the CNBTC at the pilot scale and generate a full report that is provided to the seller, who then passes that along to the buyer, so they have an understanding of how that cargo of barley will perform when they receive it in Ningbo or Guangzhou or Qingdao, typically in China or in Japan or other markets like Mexico. Just what I wanted to highlight here is you can see that the evolution of the CQCs, and this represents the shipments of barley to by variety. You can see CDC Copeland remains the #1 export variety, but you can see the decline between 2017-18 and this year in Metcalf, whose acreage is declining, and that's reflected in the shipments, whereas Synergy has grown substantially from 1 export cargo in 2017-18 to 16 so far this year. And for the first time, we have a commercial cargo of CDC Bow that was shipped to China for a total of 54 cargoes evaluated at the CNBTC this year, representing over 1.3 million tons of malting barley. So that's a fairly high-level overview of some of the things we do here at the CNBTC in terms of market development. That's our recommended list for 21-22. We've got Copeland, Metcalf, Synergy, as well as Connect, Bow, and Fraser as our recommended varieties, and new varieties in development, including Churchill, Copper, Goldman, and AB Brunette. So with that, I will turn it back over to Geoff in the event there are any questions. Thank you.
Thank you for the great presentation, Peter. So for the audience, we're now going to move on to questions for Lisa and Peter. Again, if you'd like to ask a question, the Q&A button can be found at the bottom of your screen. Maybe I'll start off. We've got enough time for, I think, one question for each of you. So maybe I'll start out with a question to Lisa. Lisa, you mentioned the international use of Black Sea and Canadian wheat and some of the work that's going on there. Maybe you can expand a little bit on why are end users mixing these wheats? What's their goal?
Sure, that's a great question, Geoff. And I think it's really important to know that the bottom line is the cost. And everybody's trying to maximize quality and price. So around the world, the quality of a product will be achieved by blending different sources of wheat. Canadian wheat is very well known for its high quality, and the price comes along with that. There are other suppliers, and it's sometimes local domestic wheat. It is quite often imported lower cost wheat, lower protein, less functionality. And so the user will blend that other wheat with Canadian or US or Australian or any other source they might be bringing in. And that's why it's important for us. We found in a lot of key markets that the Black Sea wheat was coming in. We didn't quite understand the quality. And now we're getting a good experience with it, and we can help support customers with it.
Wow, that's a great technical resource we're able to offer our customers.
Yes.
Thank you. Peter, looking at your slides there, noticing that there's a lot of interest in Canadian barley, especially in China, which seems to be paying off now. So good work on all that promotional work up till now. But there's always that hanging international competitiveness of Australian barley. I mean, the good news though is that it seems that there's a lot of of different varieties being of interest from end users, and we're sending over samples to get them familiar with our product. Are you able to expand a little bit about what an end user is doing with these samples and why they might prefer one variety over another?
Sure. Well, China, most of the world's brewing market are adjunct brewers, so they're using other sources of fermentable sugars to complement the barley malt, in particular things like rice and corn or corn syrup. And China has always been a heavy adjunct user, and because of that, they need the high enzyme potential of Canadian barley. It's not dissimilar to the wheat markets where they're looking for high protein. To blend with other origins. In the case of Canadian malting barley, we typically have fairly high protein content, high enzyme, and I should mention to producers that these days higher protein. Don't be afraid to have a little bit higher protein content in your barley. China is looking for 12 or 12.5% protein, and that corresponds to a higher enzyme content, which helps break down those starches into fermentable sugars. The flip side of that is the craft brewing market or the all malt market, where they're definitely looking for lower protein. They don't want too much. It can create problems in processing. It can create haze in the beer because they're not using those other adjuncts like corn and rice. So when it comes to a market like China, we look at varieties like Fraser, for example, or even Connect, Bow and Connect. Those will work very well for Chinese brewers. In the all malt market, it tends to be more markets like varieties like Churchill and Copper. But one thing I should mention is that the remarkable success of a variety like CDC Copeland has been partly based on the fact that it straddled both markets, adjunct and all malt. And we see that in a variety like AAC Connect, for example, that could be suitable for both the Chinese and the adjunct market and the craft market. So, I encourage producers to look at these new varieties and talk to their seed supplier in terms of how they grow in their areas, because we've got some great new varieties that are going to keep us competitive in the future.
Well, that's great to hear. And we are running out of time here, so I apologize to the audience who have asked questions. I've been fairly selfish with the time. We are going to end it there to keep on track with our agenda. But I would recommend that as presentations are going, if you do have questions, please put them into the window during, and we'll make sure that they get answered. So thank you very much, Lisa, and thank you again, Peter.
Thanks, Geoff.
Thanks, Jeff.
Thanks, everyone.
Moving on, next up is David Derwin from PI Financial, who's going to discuss some trading strategies that could help you with your operations bottom line. I know markets can be confusing, and perhaps David can shed some light on how to navigate them during these uncertain times. Take it away, David.
Thank you very much, Geoff. And it's good to be involved. You can hear?
You're a little bit faint. Are you able to get a little closer to a microphone?
I can. I want to make sure. Is that a little bit better?
That's a little bit better.
Okay. So good to be here, and I appreciate it, Geoff, and thank you to the Alberta Wheat and Barley Commission, because usually we do these presentations across the prairies, but of course in COVID times we do what we can, but it's always nice to be involved, and I always enjoy doing this. So I am going to just share it over to my screen now and continue on from here. So yes, markets definitely can be confusing, and in an environment like this, even more so, just given the volatility, the uncertainty with the weather. So what I want to do in the next 20 minutes is really try and provide not necessarily individual specific trading strategies. This isn't necessarily the forum for that, but more so to get a little bit more comfortable, a little bit more confident with some of the other marketing tools that are out there that can help you. So, when we look at what is happening with barley and wheat prices, well, I know we've had a good overview of them already on this session. We'll hear a little bit more up next as well. But what I really want to focus on is what can you do about it? Okay, because
David,
yes.
I'm sorry for interjecting, but you are quite soft, and we're having some people just in the chat say, is it possible you can go to your settings or preferences?
I can do that.
And just check that for just a second. I'm sorry to interject on your presentation.
I wonder maybe if it helps if I use a headset instead.
Yeah, that might be better.
Okay, is that sounding a little bit better?
No. Is it plugged in? Or is it like set up with
It should be. So let me try this here again. Does that improve it at all?
Oh, yes. 100%.
Okay, good.
Yeah, thank you.
Perfect. So let's get back at it here, and we will continue on from here. There we go. Okay, so let's really focus on what you can do about it, okay? Because it's the idea on when prices are volatile, there's always opportunities, but we also want to be mindful of risks. So let's focus on things that we can try and do about these opportunities and also the risks that are out there. So just to take one step back, I believe that marketing, it's always dealing with the uncertainty. I mean, just growing a crop itself is dealing with uncertainty in terms of weather and so many factors. But one thing with marketing is it can be challenging to try and manage prices, but really the best way to try and predict your future is to create it. And this is a quote that I really like because it puts some of the marketing and the pricing power back into your own hands. I find that very often there's a lot of time and effort spent where you do want to analyze and try and figure out what markets are going to do. And I know from hearing Chuck Penner earlier, and I know with Brennan coming up as well, they spend a lot of time and effort on that side of it, trying to understand what's happening, where prices are going. But there's also the next step of also investing some time into generating strategies so you can actively and proactively manage those risks and protect those revenues and capture these pricing opportunities that are in front of us. So when you look at a bigger picture marketing plan, of course, key is your cash physical sales. That's what turns your grain into cash in your own hands. That's what monetizes all the hard work. And you got deferred delivery sales that can be put in place. But very often, especially in an environment like this where people are a little bit concerned about pricing too much this early in the year with a lot of dryness in areas and uncertainty, no one wants to price too much and be caught out on delivery commitments that they can't meet. Basis sales are an important part of the process as well, as we'll see, because you always want to track not just what your flat prices are doing, but what are futures prices doing? What is the basis level doing? And that's basically just the difference between your cash price and what futures markets are doing. So there are a lot of crops that do have futures markets associated with them, which we'll see. And it really is good to track both of them to understand what's happening in pricing around the world, but also in your backyard. Futures and options, the area that I specialize in, are important to understand and get comfortable with, but it's not really just about using options and futures. I believe it's more so having an overall program that you can use on a regular basis, year in, year out, that's a little bit more disciplined, a little more structured, that lets you, as best possible, manage these risks, capture the upside, but also mitigate against the downside. For those of you who are maybe new to options and futures, because there aren't a lot of people that use them, I'm finding more and more that growers are embracing these other tools that are out there. And it's all about just, getting exposure to them through mediums like this. The education component of understanding it is important. And there are a lot of markets that do have the associated futures markets, of course, wheat, canola, corn, and soybeans. One aspect that affects every part of your business, everything you grow, is the Canadian dollar, whether it's peas and lentils or durum that don't trade on futures markets. The dollar does impact every bushel that you grow. For those mixed producers that are listening in here, whether you raise cattle to a full weight level or involved in the feeder markets, hogs as well. Not as many hog producers out there. The market's changed so much over the past decade or two. And then, of course, energy and diesel and oil. So this is just to understand that there are a lot of futures markets that are out there and tools that you can use to try and fine tune and manage the operation. Again, for those that aren't quite as familiar with futures markets, really just think of it as kind of like a deferred delivery contract, right? You're setting a price on a specific commodity for a price down the road. The nice thing about the futures markets and some of the benefits are that you really can separate your pricing decisions, your basis levels, and also when you want to deliver. And it comes back to a year like we're seeing this year, where there's a lot of patches where people are seeding into some very, very dry conditions, and they're concerned about what's actually going to come out of the ground. So naturally, they're going to be less eager to price at these high levels, but doesn't it always go that way? The best time to price your grain is also the worst time to commit your grain. So these tools here can help you separate that a little bit to try and still capture some of these prices, but without having to commit your grain for delivery. So that's another key benefit, is you do not have that same type of delivery risk, because when you deal with a company like mine or other futures and options firms, we don't take delivery of your grain. You still deal with the cash market as you would in any other situation. So it works in conjunction with the cash market. Futures aren't meant to replace it. It's really just another tool to add on top of your existing cash marketing strategies. So those are some of the benefits, that you can really separate out and not have to worry about your production risk. Options, likewise, you can separate your delivery risk as well, and you can really disconnect your pricing decisions from your delivery decisions, which is key. But options are different in the sense that it's basically like a minimum price contract, or almost like a price insurance contract, which you might be familiar with. Some of the elevators may offer something called a minimum price contract. For those that are involved in livestock, there's the Western Livestock Insurance Program. So it's basically price insurance that lets you set a floor price on your commodity, be it wheat or canola or other markets. The advantages, again, is it really lets you structure and be much more flexible in the range of prices that you want to capture. You can set different levels of protection, maybe very close to current market levels, maybe down lower to guarantee some profit levels. But it really does give you that range of prices. Instead of just locking in at one price, you can really create the different types of protection that you want. So that is key, because it does give you that downside. And just as importantly, though, it also gives you the upside, because with options, you're not locking in your price, you're simply setting a floor price. It lets you sleep better at night, but if the prices really move back up again, you can participate in a majority of that upside. I tend to use a lot of options, and I find a lot of clients do as well, because it's something that just isn't quite available, or the flexibility isn't there when you're dealing with, be it the elevators or the different buyers for your production. The option market is really an area where I can provide some value-added strategies and ideas to clients. So let's look at that just a little bit more. When it comes to wheat, there are basically 3 different futures contracts that trade. The Minneapolis Hard Red Spring, of course, is the one of the main ones across the prairie that's grown, the CWRS and the 13.5 protein. So it's a very good tool to hedge that the spring wheat. There's also a Kansas City Hard Red Winter Wheat, which has a bit of a lower protein content, and often you find that it can be used to hedge, or it will track what the CPS style wheats do across the prairies. And then finally, there's the Chicago Soft Red Winter Wheat, which is a lower quality wheat and almost can be considered like a feed wheat. And in this environment, though, and in the last year, we've seen some interesting pricing where the level of that lower quality wheat, the Chicago wheat, has been trading at a premium to Minneapolis and Kansas, an unusual situation. But that started to correct itself a little bit. But you'll often see those mispricings and those differences across the wheat market. So it's good to at least understand and get comfortable and know that there are different types of wheat contracts out there. Contracts trade in $5,000 bushels or 5,000 bushel contract size. They're all in US dollars, but this gives you a sense that there are outlets out there to help you manage some of the wheat the wheat exposure that you have. So let's look at that a little bit. Here's some information taken right from PDQ, which you're probably all very familiar with. It's an excellent source that I use on a regular basis. And this just shows the delivery price for December 13.5 spring wheat. And we had a big run up in prices after it had gone sideways for a while, and we started to pull back again, but we are still in the middle of a weather market. And today wheat prices are up a fair bit. So expect a lot of volatility going forward. That's one thing I think you can be fairly comfortable with, is that as comfortable saying is, yeah, we're going to have a lot of volatility. So we had a big run up in prices. We've come back down again, but there can be other opportunities to price this wheat as we go forward. So you want to track that price very closely. This chart here, also from PDQ, shows just the series of delivery prices for the spot prices and over the next couple of months. And then as we get into the fall time and in the winter with the new crop, there is a decent amount of carry in the market, which just means that, you know, if you're storing your grain, you want to get paid for that. And using some of these options and futures tools can help you do that. But it's good to keep track of just what the different levels are doing, what the demand is for wheat now versus in the summer versus in the winter. And those can all factor into decision making on the farm. Also, whether you have decent storage capacity, that's also a big part of this process. Basis levels is another one that I'm still surprised a lot of people don't track as closely as they should, but can have a big impact, because in some years these basis levels can move almost as much as the underlying futures price. So keep a close eye on that. If you've got some good basis levels, that might give you the opportunity to lock in a basis level and then manage and deal with the futures price component of it later. Sometimes it can be the reverse, where basis is quite poor, but futures are good. So keeping track of those and knowing where they're at, I think, helps in the overall process. So if we want to look at very quickly, just a broad picture of some option hedging strategies, at the end of the day, what you really want to do with options is try and capture the range of prices, of course, at the higher levels, setting in some floor prices to capture that. And because you're not committing your grain, it does give you that flexibility in this type of environment to be a little bit more proactive in your pricing. A lot of people are concerned about pricing too much early at this stage, which I can completely understand. So options can give you that tool to try and capture these high prices, but at the same time, mitigate the downside. So when you want to build a range of prices for your crop, it's kind of interesting to look at it this way. I mean, fairly straightforward. We all want the higher prices and we want to mitigate against the lower ones. So that's one thing that these tools can certainly do for you. Quick snapshot back to the wheat market of a few years ago. We all probably remember this quite well, when wheat was going pretty much nowhere for the coming into the springtime, and then all of a sudden, beginning in June, we started to have these really, really large price increases. And this just shows the variety of tools, that how they all work together. You know, early in the session, started buying some puts to provide some downside protection for clients at 620. Market kept going higher. So as markets went up, we bought a little bit more, a few more puts. Maybe, you know, each of these incremental trades might have been, you know, 10%, 20%, maybe a third of production. It all depended. Of course, right coming into Canada Day and 4th of July, we really had some fireworks, and a lot of clients made some cash wheat sales wherein they were a little bit more comfortable with what their production was going to be. So a lot of wheat sales were done up at these levels. And then as the market started drifting lower and lower, some clients sold futures, some bought some puts. But again, it's the idea that all of these tools have their time and a place, and they can really work together in how they can help you manage your price risk. Want to have a quick look at barley. There is no barley futures contract, but corn can be used as a substitute. It's a very good feed substitute, as we know with barley. There is a long-term historical connection between the two, and I've read some good research that the team at Leftfield, Chuck Penner and John Dreger, have done on barley and corn hedging, or at least on the correlation between the two. So it gives you an outlet. There's no barley futures market, but at least you can look at corn as one way to try and hedge some of that feed price and that barley risk. Once again, typical hedging option strategy would look somewhat like this, where you've got your downside protected and you still want to capture upside in case this market continues to go higher. So that's a quick overview of some of the tools that are out there, the ideas and the thought processes that you want to have in place. Learn more about these tools because they can be very helpful, especially in a year like this where there's a lot of volatility and weather uncertainty. Before I end here, I just want to have a quick overview of the Canadian dollar, only because it's something that, as I mentioned, affects everything that you grow and can have some fairly long-term price trends. If we go back for the past 40 years here, the Canadian dollar has moved in some long 5, 10, 15-year price trends. So are we in a situation now where the Canadian dollar could be moving back up to par? No one knows for sure, but we're certainly moving higher, and it's something that you want to keep in mind. So I appreciate your time. I'm open for questions, and I want to thank again the Alberta Wheat and the Barley Commissions for having me involved. And I'm open to take questions if there's time for that, Geoff, but I'll pass it back to you.
Well, it would dig into our break, but we'll ask the audience for any questions. And first, David, thank you so much for that great presentation. Maybe just to start things off here quickly. I noticed you put in a strategy, you showed a strategy used in 2017 on a market that's starting to look a lot like this year. Is that, what did you do did you do something similar this year when you were looking to work with farmers who were looking to increase their exposure as some of these more recent markets rose?
Yeah, this year's a little bit of a different year. I found that most of them have been a little bit hesitant about selling physical for sure, but even pricing with options or futures. A lot of what this year has been about so far is people who may have priced their wheat or canola for that matter, or even barley, and wanted to basically protect those sales in case their production wasn't there, or simply just to participate in the uptrend that we continue to see. So it was a matter of really just looking at buying call option strategies to participate in the upside that we've seen here until recently. That could very well change going forward now, where people might be putting on their new crop hats a little bit more tightly and figuring out, what do we want to do? How do we want to protect these prices, and how these option tools can help them in that process?
You're a wealth of knowledge, David. Thank you so much. And thank you for the great presentation. Seeing as there's no questions at this time, I guess we'll move into our quick break here. We're going to take 3 minutes and we'll return at 10 a.m. for our final speaker. Thank you, everyone. Well, I hope everyone is getting back to their screens to hear from our final speaker, Brennan Turner, the owner of Combyne Ag. Just looking at that poll, Megan, maybe we should drop the link for the subscription for the Market Insider email again, because it's a lot of opportunity there, a lot of opportunity and news that could be being missed. So thank you, everyone. Brennan will be providing an update on the milling wheat markets. And if you're a fan of Brennan's works, sign up for the weekly Market Insider email provided by Brennan via our website, albertawheatbarley.com. So Brennan, are you ready to go? Perfect. Right, take it away.
All right. Well, good morning, everyone. We are, as Geoff mentioned, I write the weekly market commentary in terms of what's going on kind of in the state of the wheat markets, and as explicitly it relates to the Canadian producer. I'm just going to share my screen here so you guys can see all the fun stuff that I got in the pipe to share with you over the next few minutes. Okay, let me actually just move this over so I can see it better. There we go. Okay, and we're just going to decrease the screen size a bit. There we go. Okay, so you wanted to talk a little bit about the state of milling wheat markets today, and specifically going to be focusing on three different crops: hard red spring wheat, CPS wheat, or kind of low protein varieties, and then as well as one of my personal favorites, because my family grows a fair amount of it, which is durum. And again, context here is that you know, I'm I guess you could say a fifth generation farmer in Saskatchewan. My family this year, we seeded just over 75,000 acres between Foam Lake and Frontier, Saskatchewan, as well as some extended family down in Fargo, North Dakota. So, you know, pretty close to the farm, pretty close to the state of the balance sheet. And I kind of look at markets in very much a producer's lens in terms of how I think about risk management. And David has done a great job in terms of thinking about some of the different tools that one can use to manage your downside risk and upside opportunity, or capturing those upside opportunities. And you know, but also Chuck did a fantastic job of kind of identifying some of the different trends that are happening in the feed markets, and very much so, it's definitely impacting the milling wheat market. So let's jump into it. First and foremost, I just kind of wanted to take a peek here at the most recent USDA WASDE report. Basically, this was the May WASDE presented the first opportunity for us to kind of get an understanding of how the USDA is thinking about the 21-2022 crop. And you know, I want to highlight some of the numbers on the right side of the screen here in terms of red. What you're looking at is some exports and carryout that's going to drop significantly in both.
But I'm just wondering if you're sharing the right screen, because I'm still seeing the title State of Milling Wheat Markets.
Oh, it says its screen sharing is paused. Sorry, apologies. There we go.
No, not at all. There
Good
we go.
catch. Good
Thank
catch. You. Technology. I can't wait for Zoom to be over. Okay, so on the right side here, you can see that you know, we're seeing a couple red figures, specifically in terms of global carryout. You know, a slight drop year over year. We're still talking about some pretty big crops globally, but big demand from the major importers are supporting a general drawdown in stocks. Also, keep in mind that you know, China is the biggest question mark here, as Chuck kind of highlighted in his presentation, and so you're starting to see them try to build up some of their inventories and reserves, and so this is why I think it's important to understand what is the general state of the markets with China, and then what is the general state of the markets without China. Unfortunately, China is such a big kind of behemoth that you have to account for in all cases. But from a carryout perspective, what I tend to look for is a lot of the what is left over in kind of our major competitors' balance sheet. You know, this is the Australias, this is the US, this is the EU, Argentina, and obviously the Black Sea, specifically Russia and Ukraine, to a lesser extent Kazakhstan. And so, again, coming back to this slide, you know, we're talking about some major reductions in exports year over year that are expected, largely because you're seeing an increase in production in the EU. So specifically down here at the bottom, EU 134 metric tons, a significant rebound, almost 10 million tons bigger than last year. And so that's a lot more wheat that's going to be able to go into the market, specifically of the soft wheat, winter wheat variety. So again, low protein, of which a lot of our CPS wheat is competing with. You know, similar dynamic in the Russian and the Ukrainian market. The asterisk, though, is that, and I'll dig into this a little bit later, but the asterisk is that they have some quotas in place that are going to basically effectively limit, and as well as taxes, export taxes, that is going to somewhat limit the exportability of their specific products, because they're trying to keep a little bit more product at home, kind of rein in food price inflation, and as a result, they've put some restrictions in place to prevent too much wheat leaving the country, which is net a pretty good positive for us. But at the same time, it's a little bit tough to trust the Kremlin and Ukraine, because we tend to see some of these policies flip-flop on almost like a monthly basis. So we got to stay close to that. I'm just going to quickly roll to the next slide. So thinking about where we're at going into the new year. I mean, ultimately, what demand is going to be able to put on the market is a function largely of supply. And so what is supply going to look like? Well, the report that we got from StatsCan a month ago, might have changed in this time frame for sure. But what you're seeing is a significant drop in spring wheat acres, right? Specifically across Canada, it's about 1.6 million acres less of spring wheat being planted. Again, this is all types of spring wheat. So it's CPS, it's hard red, it's general purpose and specialty purpose. But it's bottom line is that this is not a small decrease, right? And there's a lot of different crops that are competing for acres. And so it's expected, I guess you could say, when hard red spring wheat, you're competing for protein, you're trying to grow quality, maybe you're not achieving it. It's maybe easier to put in a feed barley or a yellow pea, or even obviously a canola this year, just given some of the returns that it's going to be able to provide. So it's not really all that surprising. I will admit, though, that the decrease in hard red spring wheat was a little bit more than what I was expecting, but it's still important to recognize that this is a very significant drop overall. If I get into the aggregate drop in spring wheat acres, we're talking about, or in terms of varieties, for the most part, again, hard red spring wheat has taken the large bulk of this reduction. On the flip side, you're seeing some other crops come in terms of that CNHR variety. But I think that it's also important to keep in mind that overall hard red spring wheat acres, or spring wheat acres, excuse me, in the U.S. have also dropped significantly. And so it's not just necessarily us, but it's also the U.S. that is seeing less acres. And so all things being equal, because we tend to produce some of the higher protein, higher quality wheats, that is probably going to balance out a little bit of this supply shock, if you will, in terms of the demand that we've seen and what other markets are responding. You could argue that Australia, they've done a pretty good job in terms of rebounding from some of the drought years that they've had. We're also cognizant of Argentina, but large in a way, this should be supportive of hard red spring wheat prices, in my opinion. If I break it down even further from a provincial basis, again, hard red spring wheat taking the bulk of the acres here. But what's surprising to me is that CPS wheat acres are actually increasing a little bit in Manitoba. I'm a little bit surprised in the decrease in Saskatchewan, but it's complemented by some other varieties coming into the market in terms of, again, especially purpose and GP. I fundamentally believe, just given where prices are for CPS wheat, feed wheat prices, that we could actually see slightly more low protein wheat varieties gaining more acreage come kind of the final report that we'll get in December. And there's also this question mark of, like, with some of the colder weather that we've seen these last couple of weeks, is there a likelihood that maybe some of these crops some of these fields that are going to get replanted, are they going to go into a different crop, specifically wheat or barley? Very, very much a possibility, just given, again, where prices are at and the simplicity of being able to grow that crop. If we look at kind of where prices have gone over the past year, and again, keep in mind that I'm starting this chart at the beginning of the crop year. So this is the start of August, right? The reality is that the demand and the pull of the market has certainly been augmented over these last couple of months, as we've seen a massive amount of capital inflows into the commodity space, which therein has supported futures prices, which therein is going to support the cash market, right? And again, this has been explained a little bit in the previous presentations, but long story short, when you see this build up incrementally over and over and over again, what goes up has to come down eventually. And because there were some weather premiums associated with it, this is why you saw a pretty significant buildup towards the beginning of May. One thing I want to point out, though, in this chart is specifically what happened in kind of this late December through late January timeframe here, right in the middle of the chart, below the text here of what the percentages changes are. This is when we saw, this is historically when you see some of the better hard red spring wheat prices in the market. So if you're thinking about, when is the best time of the year to price some of my wheat that's not been contracted yet, that time frame tends to be fairly good, as well as kind of in the late October timeframe, once kind of the harvest rush of all those deliveries going to the elevator. Once that's over, there's a new demand pull that kind of elevates prices. So thinking about from a forward-looking standpoint, think about those that kind of late October and January timeframe in terms of contracting for some of those opportunities. If I think about new crop specifically, though, again, it eerily echoes what we saw in the old crop price movement over the last couple of weeks, right? And again, you can kind of see at the beginning in January here, these new crop prices, I tend to think of it from the beginning of January in terms of when are the opportunities for me to price new crop. That January timeframe created some good opportunities for us to take advantage. But with, again, all this managed money coming into the market over the last couple of months, that heightened the pull of the futures market, which is therein going to pull the cash markets. If you look at this kind of yellow faded line a little bit to the right here, that's from 2017 when we saw prices go up pretty significant. David sort of referenced some of the strategies that you could employ to manage the downside risk in those scenarios, or on the flip side, be able to capture some of the upside opportunity. But all things being equal, I'm getting a lot of questions lately. Is this going to happen again this summer? Is there going to be a weather premium? We can never say never, is kind of the rule of thumb in markets. And so there's certainly that possibility. I don't think we're going to get back to the levels that we saw here a couple of weeks ago, but another push up to the top side is certainly possible. In terms of the actual futures board, again, you think about when are markets moving, when are they going higher? You tend to see kind of a stabilization to a downtrend towards those spring planting months, and then you start to see the premiums build back up. So again, this is why I think about January is maybe a good time to think about contracting new crop or even old crop opportunities. So again, maybe it's some of these simple things, like what I've shared with my family is set a reminder in the calendar to think about new crop pricing opportunities at this specific moment, because we know from a seasonality standpoint, this is a good opportunity to think about. And you got to be on top of your game. I know that there's a ton of other things that are pressing on our minds these days. COVID, obviously the biggest one, but thinking about and remembering when these opportunities are presenting themselves. It's just a simple task of setting a calendar reminder to tell you, hey, start looking into this a little bit more aggressively. From a basis perspective, it's obviously not the best that we've ever seen, but this is again a function of basically the market telling us, like, hey, we've got enough contracted product already so far, and so basis is going to reduce, relatively speaking, against that. One thing I want to point out is again this 2017-18 crop here, this yellow line that dipped below the zero basis in kind of the August timeframe. There's a strong possibility that we're going to see that happen again. So more or less, new crop basis could possibly get worse and follow some of this direction that we've seen that we saw in that 2017-18 crop year. So just keep in mind, like it's nothing to necessarily be alarmed about, because ultimately the market pulls back up. But at the same time, this is not a scenario where I think you should be necessarily pricing your wheat. This is largely when the crop is known, and there might be some hiccups in the market, but the bottom line is that there's probably going to be a further downside to the basis or the basis situation, and that's going to put pressure obviously on cash prices. But as I kind of like to say, it's the time of year to contract your wheat is not at harvest time anyways, or as soon as you're about to go into it. It's rather pricing those out in kind of the winter months, or maybe some of those spring planting premiums that I kind of just showed you here in the last couple of weeks. From an actual demand function, like we've been doing unbelievably well. I'm going to show you a couple of charts here that explain that a little bit more in detail. But it's very likely we're gonna top 21 million tons of exports this year, which is fantastic. And keep in mind, this is not durum. This is just wheat. exports, non-durum wheat exports. But with the decrease in acreage and the competition that is probably going to be renewed from the Black Sea to a certain extent, but mostly the EU and Australia, the Agriculture Canada is expecting a pretty significant downgrade in product or exports in the 2021 crop year at about 17.1 million metric tons. Personally, I think that's a little bit too bearish. Just given our reliability in terms of being able to deliver product efficiently, the opening up of some markets in the Latin American countries, I'll explain that in a second. I think the number that we're probably going to see is going to be closer to maybe 18 million tons. There is a possibility of 17.5 million tons, but there's just a strong demand function that we cannot ignore. And so I think that Agriculture Canada, as the year goes on, is going to have to revise their numbers higher. You can see here, I made my own estimates after the April acreage estimates that came up from StatsCan. This is the 18.6 number that I estimated. And again, so I think that at minimum, we're probably going to be around 18 million metric tons, and ideally we'll hike higher from there. Just on a weekly basis, one of the numbers that's more impressive to me is the number of weekly shipments that we've had that are above 400 and 500,000 metric tons respectively, right? So you're talking about basically almost a dozen different weeks where we've seen all 400 or 400,000 tons or more shipped out of country. And that's well above what we've seen in the past number of years. Again, when we see these last couple of weeks of the marketing year, historically speaking, we see a little bit more of a push, and that's why we're probably going to get to that 21 million metric ton mark. There's some questions, again, will that be pressured by new crop availability in Europe and maybe even Australia? But bottom line, 21 million metric tons certainly seems achievable based on kind of the average of what we're able to ship. In terms of a destination standpoint, through this past March, pretty much across the board, we've seen some increased opportunities around the world in terms of demand for Canadian non-durum wheat. I would prefer to highlight, obviously, China is probably the biggest one here on this table to look at, specifically in Asia. Their exports up about 3.5x year over year to almost 2 million tons. I mean, it's strongly expected that you could probably see China import as up to as many as 3 million tons of Canadian wheat this year, which is obviously a pretty big positive because it's compared to years past, like that's a massive increase, right? The downside is that maybe some of these other Asian markets that we've historically had some good opportunities in, we're not getting into as much because, again, Australia, instead of shipping their product to China, just given some of the geopolitical spats going on there, we're not maybe as intensely involved in those markets. One last thing I want to point out, though, is these Latin American markets: Peru, Mexico, Colombia, Ecuador. I know the Alberta Wheat and Barley Commission, as well as a couple other producer organizations, have in the past couple of years done some pretty extensive work trying to get some market access opportunities in these countries. And this is literally proof in the pudding of those efforts. And so, just you gotta appreciate some of these efforts that these producer organizations are going through, because these are growing markets. These are growing disposable income markets where wheat and bread and some other products are coming into the diets a little bit more readily. And so I continue to be excited about these markets. Keep in mind some of the competition from the internationals. I know Russia is trying to get into these markets pretty heavily, but cognizant of their export taxes, they might be priced out at this point. So something to think about there. But certainly kudos to the producer organizations for, again, finding this opportunity and continuing to push on it. Just cumulatively, I mentioned, 21 million tons is the mark. We're just over 16 million tons through, not this past week, but the week before. And so making some pretty good progress here. Historically speaking, you can kind of compare against last year in the 3-year average. Usually we're only at about 12 million tons by this time of year. So, just this pace continues to be very impressive. And I'm optimistic that we're going to continue doing so. In terms of where we end, though, thinking about old crop 2020-21, expectations are ending stocks are going to be around that 4 million ton mark. So that's again historically low, as kind of this chart suggests. If I think about what new crop is going to be and cognizant of the smaller supply volume, the reality is that we're probably going to get to a world of that's going to be below 4 million metric tons. Currently, Agriculture Canada still, again, is expecting, based on exports of just 17.1 million metric tons, that we'll have a carryout of just over 4 million tons. But if we see any increase in exports, that's going to support Canadian wheat prices. And so, if I think about new crop pricing opportunities for 2022, not just this coming crop year, but knowing that prices could potentially increase pretty significantly again, I think you're going to see another switch around to much more hard red spring wheat or CPS wheat production in the 2022 crop year. So again, thinking about seasonality, when should I be thinking about pricing that new crop before the crop gets planted? Again, that January timeframe is definitely one, and again, the May timeframe is another. Just from a stock standpoint, this is from the most recent stocks report that StatsCan came out with. Again, you think about from a total wheat stocks, significantly lower compared to not just years past, but also the seasonal average. Wanted to highlight the non-durum wheat stocks here on farm being about 1.5 million tons less than what we saw last year, but it's also pretty similar to what the seasonal average is in terms of the 5-year average. So that's extremely positive. If I break it down a little bit further in terms of regionality, we're talking about a lot less non-durum wheat in Saskatchewan. I mean, Manitoba, not so much, but Alberta for sure. I mean, these markets are proving, or the prices have proven that they're pulling wheat off the farm, and that's just a general indication of markets working the way that they should. Just kind of bringing this all home on the hard red spring wheat side. I'm definitely bullish on the decreased acres, and I'm thinking about the expanded opportunities in Asia and Latin America. But the big question is, how much will commercial demand increase if we start to see some of the opening up of our economy and our population relative to the COVID lockdowns that we've seen across the country? And thus, therein is also this competition from abroad in terms of a rebound in production of the Black Sea and the EU. Those things are going to weigh, I think, on our exportability, and it'll be a tough situation because there are some price sensitive markets here, but which could cause some of the Black Sea wheat to get priced out, and that's what I'm probably most optimistic about. But at the same time, I would say that hard red spring wheat prices are probably going to stay flat to maybe a little bit higher for probably the first 6 months of the crop year before dipping back down to where, as we start to understand what the 2022 crop year starts to look like. Okay, moving into CPS wheat. This has been a crop that I think if you've been able to get into, or low protein varieties in general, you've been paid pretty handsomely in terms of returns. And so at current prices right now, as of last week, at almost $7.50 a bushel, this is impressive, to say the least. Large in part, again, as kind of David mentioned and as Chuck mentioned, this is following the feed market and more broadly the corn market higher. And so there's just impressive opportunities. I don't expect this market to drop until you start to see corn and or feed demand start to drop. So again, just some bullish undertones, just generally speaking of. And just more broadly speaking, I would say that CPS wheat prices have just been incrementally increasing higher and higher and higher. And as and this is a function of not just feed demand increasing, but also some of those ancillary markets that I talked about in Latin America, opening the doors for our low protein varieties to go into those markets. So it's not just a function of feed demand, but also expanded market access. So again, full credit to some of our producer organizations for finding these opportunities. In terms of what CPS wheat prices tend to fall, it's the Kansas City hard red winter wheat market. And so much like kind of, again, 2017 being this yellow line, that's when we saw the highs in early July. And so we're kind of mirroring that picture in terms of where markets are at, but expect some of that rebound to come around in the winter months, which is, again, a seasonal pattern that you just have to be cognizant of, in terms of pricing some of your wheat. For new crop, though, specifically, I think about some of the best opportunities, kind of, again, similar to hard red spring wheat. Some of the best opportunities I find are actually in the kind of the spring months timeframe, and the history backs me up here in the last couple of years. You can look at the charts here in the different lines, but it seems to be that maybe it's CPS wheat is one of those at the last second, we're going to decide on these acres. And so buyers tend to buy a little bit more aggressively towards the tail end of the lead up to the planting campaign. And so I think this has been a little bit supportive of new crop prices in the early springtime months. But again, relative to, if I just flippantly switch back here at what crop spot prices are at $7.42 a bushel, relativized against new crop prices at $6.85, I think the spread is going to narrow. And again, as long as feed demand stays strong, that $7 target for CPS or low protein wheat is probably one that is certainly going to be achievable again in this coming crop year. In terms of a basis level, you could argue that it's kind of been sideways for the last couple of months, but as we get into that harvest timeframe, across the board, you can see the last couple of years that basis starts to improve and improve and improve and improve. What this is basically saying to me is that I might want to lock in the basis and then just price for maybe a deferred delivery. It could be January movement if you're thinking about tax implications. It could be a February movement if I'm thinking about tax implications, excuse me. But the point here is that basically as harvest starts to accelerate, you start to see basis levels start to improve. So I think that's something to think about as well if you're thinking about managing some of your downside risk. Ultimately, from the bullish standpoint on CPS wheat, I think that the acres aren't as big as anticipated, and I think that they could probably go higher. But as Chuck was kind of mentioning, with the feed demand likely sticking around at these heightened levels for at least the next year, or until we can kind of reset the supply function in terms of all the edible oils, in terms of the animal fats. I mean, there's a lot of different variables that it's just incredibly difficult to cover in just 30 minutes. But the point is that this feed demand is going to be here for the next couple of years. If you add in the function of biofuels and renewable diesels, ethanol function, we're seeing a couple plants here that are in Western Canada specifically that are using wheat feedstocks. These are bullish undertones for an already bullish market. So, I continue to think that $7 handle for CPS wheat is certainly achievable, and maybe slightly lower for the feed market. On the bearish, I mean, it's the bearish side of things. It's the substitution effects. They are very real, especially in these price sensitive markets. Latin America could historically be considered that, but Asia more so. I think that just some of the geopolitical risk that we're seeing between China and some of the other neighboring Asian countries is going to complicate things, and from an exportability standpoint, we could see some musical chairs in terms of what wheat is going where. You've already seen it. Chuck talked about it in the barley world, right? In terms of Australian barley no longer going to China. Now it's all Canadian barley for the most part going. I think that is certainly a possibility in terms of our wheat making it into new markets. But at the same time, I mean, we've established, hey, we are a credible supplier. We can deliver in terms of what you're asking for. And as long as the feed demand is there, we should be able to provide it. So, relatively bullish, in my opinion, for CPS for the next year and a half. And then finally, let's get into durum. So durum prices, it's kind of like this old hag of the wheat market, I guess you could say, fairly flat, not as much volatility, if you will, from a cash market standpoint. At current spot prices, though, we're doing pretty good relative to years past, especially the seasonal average. Durum is also one of those crops where it's all about the quality, right? And so depending on what we're able to produce and what Mother Nature gives us at harvest time, that is the ultimate determinant in terms of where prices are going to go. Keep in mind that we had a bit of a smaller production year in Europe last year, and I'm going to show you some of the implications of that. But with Europe again rebounding, there were some frost concerns a couple weeks ago. Those are largely have been alleviated though. I think that durum prices are probably going to stay again kind of where the market's at right now. So just from a new crop standpoint, we're talking about a market that's kind of about a 7.5 on average across Western Canada for September movement. 2017 is another great example where we had some weather issues, and so that's when the market started to climb up as combine started hitting the field in August, and there was some inclemental weather and there was some tough quality that was coming off. But once the rest of the market once the rest of the country started to harvest their durum and it wasn't as bad, well, you saw the massive price reduction in terms of prices pulling back by about $1.50 a bushel. So something to think about here is as you get closer to harvesting durum, one thing to consider is pricing new crop, maybe a week or two almost before you harvest it. And sometimes that's a risk depending on how much you've contracted. But my point here is that as the crop comes off and the quality is more readily known, we historically start to see prices drop until at least kind of mid to late September, when again that first demand push is fulfilled and buyers start to look for new supplies to fill their pipelines. So something to think about here is just this Mother Nature asterisk that can significantly move the market in a very short time period before things start to settle out. In terms of an export standpoint, we've done, again, just like non-durum wheat, we've done a fantastic job this year. And at the end of the day, I think that the exports that we're going to see at 5.7 million metric tons that Agriculture Canada is forecasting is extremely positive. And I'll walk through a couple of the reasons why we've seen that, namely the European. But if I think about new crop in terms of where we're going to be able to produce, the likelihood or what we're able to ship, I think that we will see some strong opportunities again in 2021. And so they're in at 5 million metric tons. That's a pretty positive, because compared to the last couple of years, it's somewhere between 500,000 to maybe 750,000 tons more than what we've been able to historically ship. So again, a positive note. From just like how we've been performing standpoint, we're starting to trail off a little bit. But again, I think about the weeks where you're seeing over 150 metric tons, much like in spring wheat or non-durum wheat, that 400, 500,000 tons or more shipped on a weekly basis. For durum, obviously not as big as a crop, but the number of weeks above 150,000 metric tons is incredibly positive. So this is just an indication of, again, being able to fill boats and get product to market that is looking for the commodities that we are able to produce and we're a lot reliable for. In terms of specific destinations, Italy has come back to the market in full waves, and again, full credit to not only just the producer organizations, but some of our foreign trade associations in terms of or some of our government officials going into these markets and saying, like, hey, we are good producers and we it is safe, and so on and so forth. And so this jump, and sorry, by the way, I have these backwards. I just realized these numbers 2021 and 2019-20 should be flipped. So in terms of Italy, it's taken in 1.1 million tons through March so far, which is again 80% higher, largely accounting for almost all of the increase in European exports. If you think about the northern African markets, those are by far the biggest markets for us in terms of where our durum is going. They had some production issues last year with a bit of a drier year, and so this is a reflection of that function not being able to produce as much. Keep in mind that a couple of these countries are really trying to be a little bit more self-sustainable, and so they're subsidizing the cost of better production equipment, better seed, in some cases irrigation. And so reliability on these specific northern African markets is something that we're going to have to keep an eye on going forward. But they are very susceptible to any weather. And so whenever there's a weather issue in these parts of the world, just expect that we're going to be able to help fill that demand that they can't supply themselves. And on the flip side, the downside is that Turkey has been importing a significantly less amount of durum this year than they have in years past. And that largely defines why we've seen less exports to the Asian markets. Japan, Indonesia, some of these other Asian markets, their imports are relatively flat year over year. So nothing to really write home about there. But again, just highlighting Turkey. Are they going to rebound in the coming year? If so, that would be a boom for Canadian durum prices, in my opinion, just given what they imported last year at almost 1 million tons technically it was over 1 million tons in the 2020-21 last year, not 2019-20 crop year. So net at 5.1 million tons shipped out through week 41, it's extremely positive. Again, we got about a calendar quarter left. Are we going to hit 5.7 million tons? I think it's certainly possible, just given the pace that we've seen so far. which is again supportive of where ending stock should ideally be going. So if I look at this carryout, we're getting pretty tight. Last year was fairly tight. This year is fairly similar, but with kind of reduced, I guess you could say, European demand because of those expectations of a better crop. Same thing in Northern Africa. This just means that there's less exports. Again, this could be completely changed if Mother Nature decides that she wants to rain on the crop as it's about to be harvested, or as it's trying to get harvested. So that's probably the biggest asterisk here, because durum is such a quality sensitive market. We got to keep in mind. But at 1 million tons of carryout, that's still significantly below the 5-year average and what we've seen in the last couple of years. So net, I think that prices are able to kind of stay in the current paradigm that we're at, kind of in that $7.50 to maybe $9 range on the top end. But again, if there is any weather situations, you could certainly see prices jump up close to that double digit again. That seemingly a lot more farmers are kind of expecting, and that they've gotten in years past. So something to think about there. Just wanted to highlight quickly the durum stocks here. On farm, they've dropped significantly year over year, about a fifth lower compared to last year, and about a quarter lower than the 5-year average. It's a similar thing though, and on the commercial side of things, in terms of the decrease. But as most of you can understand, the pipeline, just moving grain and getting it through the pipe, is not necessarily a good reflection in terms of where the stocks are. So I would argue that the commercials are doing a really good job of moving the grain after it gets delivered by farmers, and that's why we're still continue to see some strong demand. From a stock standpoint, though, we're there's certainly tightening up, and so if I think about what durum could probably hit the market over the next couple of weeks, it's I can say that we're on my family farm, we're almost 100% sold in old crop durum, just because I don't think that the market is, from a global standpoint, largely anticipating this next crop year, and specifically from Europe. I've had conversations with a variety of buyers in Europe, and their expectations are that they're not going to depend on Canada as much. So I just think that if you have some old crop durum, consider maybe moving it, unless you're kind of in that adage of I grow durum every year, but I only sell it every 3. If that strategy is working, then stick with it. Stick with what works. Don't it's not broke, don't fix it. Ultimately speaking, if I think about the broader picture, the demand for feed grains is continuing to weigh on milling wheat prices, right? And so if we look at where the market's going to go, this year has been just a bit of a gong show relative to the years past. It's hard to make some accurate predictions because of the COVID stresses that we've seen on the markets, and obviously supply chains in terms of freight and ship capacity. But bottom line is that the strong demand from feed is just pulling milling wheat markets higher, and that's generally a positive that we haven't seen for many years. However, the flip side is that volatility is expected to maintain, and this is a function of 2 factors. The first being geopolitical risk. I forgot to add the second point here, I realized, but the geopolitical risk. I mean, this whole COVID situation, China, the U.S. is now asking for renewed investigations. I think that these tensions are not going to subside, and as a result, we're going to continue to see some of the volatility in the market. The second part, though, is that the amount of managed money that is trying to get into inflation-adjusted markets, basically trying to account for, hey, if inflation is running at 4% and I'm only making 5% a year, well, my net return is actually 1%, right? And so the amount of money that is coming in from managed money and hedge funds and whatnot has exploded to new records, and that is a function of some of the exchanges allowing for increased margin limits and how much a price of a commodity can move in a single day. So I would expect, like when I have friends on Wall Street who are now talking to me about commodities instead of sticking to their equities and bonds that they historically trade, and they're asking me, hey, Brennan, what's going on in the corn market? What's going on in soybeans? Like that is almost an indication that you should get out of the market. But the difference being that these market conditions in terms of increased margin limits and whatnot, they're here to stay. And so with inflation here, I can just only expect probably more traders to get into the market, which means more speculation, which means more volatility. Therein, thinking about this volatility, you got to be mindful of some of the seasonal strength and how can you capture the upside in these volatile markets, and then again protect the downside risk if markets are to drop. So I think that the kind of the laggard effects of COVID are probably going to be around for the next year or so as we continue to sort through some of these supply chain challenges. But all things being equal, again, we've seen some great opportunities over the past year. I think that they're going to carry over into this next year. And where the commodity swing is probably going to pull back is maybe a year from now. And so be mindful of that as you think about new crop pricing for 2022. It's something that we often overlook. And from just a risk management standpoint, there's great opportunities to lock in 10 or 20% when you know that the market's at the highs and it's likely to pull back. So just be mindful of some of those calendar dates that we discussed here. One of the ways that we can help manage some of the volatility or capture some of that upside risk at Combyne, our kind of crop marketing hub platform, we've created a multi-buyer target offer functionality. So you can literally put in a customized target price and freight, be it FOB or deliver the elevator, for up to 10 of your different buyers. And so I can tell you that this specific product is still in beta on our platform on Combyne.ag, but what I can tell you is that a large variety of the line companies are using it because at the end of the day, they're looking to buy grain. They know that stocks are tight. They know that farmers are holding on to things a little bit more. And so they're diversifying how they're able to buy grain. And so if you think about using target pricing, this is a simple tool. There's no cost to use our platform. Our goal is to make cash grain trade easier at Combyne and literally empower your grain marketing plan. So if you're using target offers, consider using this multi-buyer target functionality. And further to that, we actually can integrate into a variety or the tools that the buyer is using for their own target offer functioning. So that's a simple thing to think about or keep in mind. You can have a private chat, make a call directly from the mobile app to the buyers to talk about the target price or freight that you have in mind, or even the movement period, as I kind of discussed here on the right side. Hey, Alex, can we change the movement? When do you want to move it, right? So you can still have that personalized conversation. But just to kind of give you a context, like there's a lot of sustainability buzz in the market. And so we're also integrating into a couple of different precision ag tools to help try to discover some market premiums for things like low carbon grain or low fertilizer use products. And this is an evolving market, in my opinion. And so we're staying pretty close to it to ensure that farmers are being compensated for some of the great things that they are doing. So just, it's kind of in the future, but something to keep in mind in terms of how we're operating as a company. And then last but not least, we're an ag data transparency certified company. So how a user uses our platform and the data that they input into it in terms of prices or contracts or whatnot, that is their data. It's completely theirs. Whether or not they share that, that's completely up to them, and who they share that with is up to them. But these five core values of trust, transparency, control, neutrality, and efficiency. This is what we kind of think about on a daily basis. So, we're very much in the thick of the cash grain markets, and appreciate the time today, and happy to answer any questions that you guys might have.
Well, thank you so much, Brennan. That's a great presentation. Before we jump into our final round of questions, just one final reminder to the audience that if you'd like to ask Brennan a question, just press the Q&A button at the bottom of your screen and type it in. Brennan, I have to say thank you so much for the recognition on the promotion work that we've done. I have to extend that praise to Cereals Canada. We work with them for a lot of promotion in South America and North Africa, and it's while China is definitely pulling the spotlight this year, it's always a positive to see those numbers to South America continue to go up, because we recognize that Canadian wheat, and specifically Albertan wheat, has a logistical advantage to that region versus the EU and the Black Sea. So yeah, it's always a pleasure to have that recognized. We have one question here just to start. We have an ongoing debate on whether we should focus on CPSR, which is mostly grown in Alberta, or continue to brand Canada as a high protein CWRS producer? The argument against mid-protein wheat for export is whether we can compete with the US and the Black Sea. We'd appreciate your thoughts on the longer term prospects for mid-protein wheats in Canada.
Yeah, I mean, it's a good question. I think what the market is telling us right now is that there is demand for these products, right? And so therein, it's not necessarily a matter of what do we want to be branded as from a production of wheat standpoint? Do we want to be known as a high quality hard red spring wheat or CWRS spring wheat variety player, or is it better just to be known as hey, we can produce a high quality product for a lot of different protein levels that you need. Oh, you're looking for this specific cake or bread product, we can help you out. If you're looking for this for specific pasta or couscous making purposes, hey, we can help you out. And I think so more broadly, that ability to bring a wide range of products to market is something that differentiates us from almost every other player in the world, especially the Black Sea. Right? You could argue that Kazakhstan, they're trying to introduce some more durum crops into their rotation, but there's a lot of question marks there. So I think in the next, probably the biggest window for opportunity is probably within the next 3 to 5 years to try to capture some more market share before maybe some of these Kazakhstans or others are able to come into the market with maybe some higher quality product. And this is a function of genetics and varieties being used in these countries, right? And we have to assume that they're only going to improve. At the same time, we would hope that our genetics are going to improve. But I think that window for being able to capture some of those mid-protein markets, it's going to be here for the next 3 to 5 years. And so I'm anywhere that I go, I'm a big advocate of just branding Canada and Canadian producers as high quality wheat producers. And again, it doesn't matter if it's for a high quality hard red spring wheat, or if it's for a low protein winter or spring wheat variety, or even if it's for durum. And I think, in the feedback that I get from the large conversation or the conversations that I have with some of these European players or Asian market players, is that they agree with this, and this is why they continue to come back. And I think that the type of work that we do in the kind of the down years from a commodity cycle perspective, that work is literally why we're able to hit such significant volumes of demand and meet that significant volumes of demand in these high commodity cycle years. So it's a broader rule of thumb in your farm balance sheet. I think in these high commodity years, it's being able to capture the opportunity and improve your balance sheet. Whereas in the low cycle years and the low price cycles, we think about ways to improve efficiencies and improve specific, can we increase this by 5%, or let's decrease fertilizer use and see if we can still hit this number, right? Like that, those are the numbers that we can pull on. It's a similar dynamic just from a market accessibility standpoint. I think even further to this, again, if I think about sustainability, this is part of the Canadian wheat producer brand, in the sense that we produce a quality, safe, and ultimately good for human consumption product that anybody in the world is going to want. And I think as there's more demand for the sustainability attributes or whatnot, whether it be from domestically or abroad, again, this is a message that we can share. Like, we are doing these good things. If not, we wouldn't be able to produce such great quality.
No, absolutely. I know from some of our international promotion, having we make sure that we take our farmer directors out on these trips to present to these international buyers, and they often get the most questions, simply because there is this growing interest in sort of how this product's being produced, and there's looking for that verification, and having somebody stand up and say, I do this and this is what I do, as well as when we bring international buyers over to Canada, they can actually see for themselves the production process. Something a little harder to do in the modern world, but hopefully we'll get back to it.
That's my goal.
Just looking, there's no questions at the moment, so while we wait for any additional questions to come in, I might touch on a comment you made about durum. That there's currently ongoing strong demand for durum, but we saw a record train of over 200 rail cars shipped this year, which was exciting. But I think I heard you say that EU durum buyers are not expected to be as reliant on Canadian durum next year. Is that correct?
Yeah, and I mean, this is largely a function of their own crop kind of rebounding. You saw some issues last year just related to drought, and so the need to import more increased. I think more broadly also there was a function of kind of at home cooking, which in some cultures people are making more of their own pasta, right? And so they're demanding more flour products, and so the local Italian market couldn't fulfill that demand with their own supply, and so by importing more Canadian durum, it's just it's a function of supply and demand. So this is also a reality, is that as economies start to open back up, that household demand function is probably going to reduce a little bit. You could argue that it's going to be supplemented or substituted by the commercial demand aspect, but for the most part, that combined with the increase in production in Europe, they were just saying that expectations aren't going to be as high this year. And then again, this is reflected in the expectations of a lot of other private forecasters and Agriculture Canada, right? They expect it to pull back a little bit. So not a huge surprise, but I would say that the European market is probably where we're going to see the most pullback in terms of market accessibility.
That domestic piece is really interesting to hear and is in line with some of the concerns. We heard about the domestic crop last year. I just wanted to touch too. Have you heard any? One of the countries we heard a lot about in the past was Kazakhstan, and that's something that hasn't really popped up in the durum markets recently. Is that something? Have you been hearing the name of that country for durum exports at all?
I haven't been following it super closely, so hard to say. I
Sure.
think that like a couple of the other Black Sea countries, they're very cognizant of some of their own domestic food prices, and so it's a market that we just more broadly have to stay on top of and close to, because it can have a significant impact. But I think that just with COVID and again some of these export trade restrictions, there's just this world that we don't have to care about them as much right now, just because they're very focused on kind of this domestic insulation. So I think it's a competitor that we got to be very, very mindful of in the coming years. But in the next year, I don't think it's going to necessarily be a huge competitor. And so again, this should be supportive of durum prices more generally for that time frame.
We've got a question here. It's around the basis. I might expand on it a little bit, because you did post that basis question or that basis graph that showed that while markets were increasing in value, futures markets, we saw the basis decrease, which is expected, but that we have not seen the basis really rebound as markets have come back. I think you mentioned that this was kind of indicative that buyers are feeling that they have good stocks on hand. Is that
it's more so that they feel like adequate in terms of the amount of coverage that they have going into the harvest time frame, right? So what this is basically saying for specifically September movement, like basis is obviously going to be slightly different for October, for November, for December, for January of next year, right? But and again, I've shared the screen again to kind of show the chart, but the point here is that what this is indicating to me is that there has been a fair amount of crop that's already been bought, and so they just don't need as much right now to fulfill their current expected obligations come harvest time in terms of filling boats and whatnot that are coming into our ports in August and September. So, and even for that matter, October. So I think that's more or less what the basis is doing. Now, keep in mind that 2017, this yellow line here, it dropped significantly before rebounding a little bit with some quality concerns in early August and mid-August. And ultimately basis started to improve again once the kind of the harvest push was over. So I'm not a big fan of pricing grain off the combine. I'm a bigger fan of locking in prices and being able to deliver on those contracts so that I can ensure cash flow from those higher prices in the spring or the winter time when I contracted it. But if you're thinking about basis explicitly, just think about some, again, it's a similar dynamic, and this is largely a function of where the Canadian dollar is going to go. Let's call a spade here. But there is, I tend to see better opportunities for basis in kind of that October, November timeframe, and again in January, which largely mirrors what the cash market does. And I'm just going to go quickly scroll up here to the spot price so you can kind of understand that. Again, October, late October, November, you can kind of see it here on this chart at the very bottom in the orange and the gray. That's where you kind of start to see the highs of the market. Whereas the same thing in the build up towards the end of January in terms of pricing opportunities. So those are those. If I'm thinking about just not just necessarily a basis, but also a cash standpoint, those are the two windows that I tend to think about most in terms of sometimes not just pricing old crop, but also new crop. Great question, though.
Well, thank you. Maybe I'll ask one last question, which seems to be hitting a little closer to home. Who do you think's better at hockey, Milestone or Notre Dame College?
Well, considering that I'm an alumni of the Alfred College of Notre Dame, and there's quite a few Notre Dame Hounds in the NHL playoffs right now, I'd have to say that Notre Dame has a slight advantage. And I also have to tell Tom here that the last question was asked by Neil Maisonneuve, who's a buddy of mine from Notre Dame. So, I mean, Notre Dame is already outnumbering the people from Milestone on this call. So, generally speaking, I think Notre Dame wins.
All right. Well, thank you so much for that fantastic presentation, Brennan. Really appreciate it.
My pleasure. Thanks for having me.
Well, everyone, that's a wrap for What's Happening in Wheat and Barley Markets, a webinar brought to you by the Alberta Wheat and Barley Commissions. I want to thank everyone for attending and asking some great questions. As a final reminder to the audience, we have recorded this webinar, which we will upload to our YouTube channel. The video will be available for you to rewatch, or if you want to share this webinar with friends and neighbors who couldn't make the webinar this morning, please send them the link. While you are there, please like and subscribe the video, but also please check out some of the other resources on our YouTube channel, such as our In the Field webinars, which are an agronomic webinar series with researchers and industry agronomy experts. Finally, on behalf of the Alberta Wheat and Barley Commissions, I'd like to thank our speakers again and all of you for joining us today. We hope this was insightful and beneficial, and I look forward to doing this again in the future, hopefully in person. Goodbye, and have a great rest of your day.